moderation in inflation coming down into next year. We're seeing this across central banks, and we're seeing this in the analyst community here, which is basically that you have inflation moderating in the next several months to 2023. But at the same time, as each month passes by, you see a positive revision to inflation projections. Look at the Bank of England, for instance, projecting basically double-digit inflation by Q1 of next year. And so you have the inflation side of things. And at the same time, I think there's a structural shift taking place, which is really occurring in the supply chains. And you're seeing a change in attitudes by a lot of places, whether Germany, whether it be Japan, on the kinds of energy that they're willing to now accept for their economies. That kind of pivot is not going to come cheaply. So I think we may be dealing in an era that has structurally higher inflation for quite some time, especially as supply chain shifts, whether it be on energy or more onshoring taking place. That creates a higher terminal rate in the next several months.
Mazen, thank you so much. Thank you for staying up too. Mazen Issa there, TD Securities US, joining us to talk about FX. Speaking about FX, it's a weak dollar story, second column, and a very strong equity market story for now, and that's a snapshot of markets. Rich?
Yep, let's check in with the first word news. We've got China. We've been covering this one, planning new measures to stabilize growth. That as the economic recovery slows down amid COVID lockdowns and indeed a property crisis as well. State Council reportedly readying a 19-point policy package. It's all designed to help keep economic operations within a reasonable range, including a quota of more than $43 billion of policy and development financial tools. US sending its response to the European Union's latest proposal to revive the multinational accord on Iran's nuclear program. The EU saying the US response has been passed on to Tehran, which confirmed that it's undertaking a detailed assessment. State Department did not disclose details, but said that President Biden is committed to achieving a diplomatic output. Right, Russia's industrial base. Smallest contraction there in 4 months. It is the latest sign that the economy is adapting to sanctions over the war in Ukraine. Industrial production was down 0.5% in July. That was a much smaller drop than had been anticipated. Increasing mining and oil output helped to boost performance. We got also sectors like clothing, semiconductors and pharma seeing rebounds, and that was really thanks to an exodus of foreign competition. Texas naming BlackRock, UBS and 8 other financial firms as being hostile to the energy industry. It's a move that could cost them business with the state. The state comptroller also named BNP Paribas, Credit Suisse and Danske Bank as companies seen to boycott the fossil fuel industry. The announcement ends months of suspense that led Texas municipal bond issuers to avoid banks whose status was unclear. And that's a snapshot of the first word headlines.
Yeah, Rich, so let's have a look at earnings now in Australia. So we're almost through, not completely, but we're getting to the tail end of this, and it's really some cool data that we managed to dig up here. So in terms of the market reflex and reaction to earnings when they do come out, and this is really a spectrum of the one-day percent change in that stock or in that sector following the earnings release, you get a sense really of what tends to react very well, okay, and what sort of has a negative reaction really on the back of earnings that have generally come in roughly along expectations. So just a snapshot, if you will, here of market tendencies in this reporting season, Yvonne.
Yeah, and generally it's been pretty good news and good earnings when it comes to the energy sector, materials as well. And we're going to hear more from South 32 coming up next with the CEO, Graham Kerr, later on Bloomberg Markets Asia. That's going to be at 1:20 p.m. Sydney time, 11:20 a.m. if you're joining from Hong Kong. Their full-year underlying profit did also beat estimates there, Rish.
Yeah, let's have a look at one company whose stock is on an absolute tear. It's Qantas, saying travel is roaring back, allowing it to cut debt and buy back shares, even as it posts its 3rd consecutive annual loss. Paul Allen joins us now for a close look. Paul, I mean, it does seem that things are improving for Qantas post-pandemic, and the share price surely reinforces that narrative.
Yeah, definitely, Rish. The market really liking the Qantas story at the moment. Never mind that $1.86 billion loss. It's all about what's going to happen in the future. Customers and staff, not so convinced by the Qantas story. I'll get to that in a minute, though. But no dividend, as you might expect. But Alan Joyce, the CEO, did announce a $400 million share buyback, which he described as a vote of confidence in the future of Qantas. Net debt, that was down to $3.94 billion, well below the target there. Qantas struggling with fuel costs, which more than doubled on year, but every airline's facing the same problem. The not so good is Qantas sick leave was 50% higher than it normally is. There were isolation requirements around COVID and a very bad flu season in Australia as well. And that had a real cascading effect. A lot of flight cancellations, a lot of lost bags, a lot of angry customers, a lot of angry staff, to the point where Alan Joyce had his house egged earlier this year and there were calls for him to resign. So while the market's very happy with Qantas's performance today, staff and customers not so much. So the CEO's got a bit of a job on his hands to improve customer satisfaction.
Yeah, certainly his reputation on the line now, it seems. Air New Zealand, Paul, also reported results earlier today. Well, how's the outlook looking there?
Yeah, another full year loss for Air New Zealand as well, $450 million, and that was a little worse than the year prior. Not such a great reaction from the market here. Air New Zealand shares currently weaker by about 0.75%. CEO Greg Foran, though, also optimistic about the future. He says the airline's now in the revive stage of its survive, revive and thrive plan. New Zealand's borders have reopened. Air New Zealand sees capacity at 75 to 80% of pre-COVID levels, but it's got the same issues as Qantas and other carriers as well. Staff shortages, high fuel costs, a very tough macroeconomic picture, and we're pressed on when Air New Zealand would return to profitability. Well, not so sure, and a return to dividends, well, 2026, and unlikely to be any earlier than that at this stage.
Oh, that's too far away, Paul. 2026. Let's talk about that. 2026. Paul Allen, live for us out of Sydney. Right, just straight back to this Bank of Korea briefing that's taking place right now. Just the latest line coming through here. So if you're wealthy and rich, maybe bad news for you that the Bank of Korea can't help high-income earners strained by rate hikes, although the bank is saying that it will, together with the government, seek to ease pain for low-income borrowers. That's nice. That's sweet.
Well, the one key one is that there's no change in that 25 basis point rate hike stance.
Yes.
For a while. So, you know, can they get a little bit more hawkish? Maybe not. But they did mention about the whole capital flows sort of situation there and the concern there as well. So we'll continue to flesh more lines here as we get it. Coming up, we'll take a look at Thailand. A court there suspended Prime Minister Prayut Chan-o-cha as it examines whether he violated a new charter produced by his allies. More just ahead. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming through?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from?
We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
equity markets, generally speaking, are moving to the upside, not in the case of Jakarta there. And there we go. Malaysia. Market up over 1%. Didn't see the the set because it doesn't come online for another 12 minutes. It does come against this political background as well as a Thai court suspended Prayut Chan-o-cha as Prime Minister, examining whether actually he violated a new charter produced by his allies. Bloomberg editor Margot Towie is in Bangkok itself. And Margot, give us a sense of who wielded the knife, as it were, and why.
Oh, well, it was the Constitutional Court accepted a petition that he had exceeded his term. The term was set by the Constitution that he oversaw after he staged a coup. So, really what we have is just a bit of a shift of power, not even much so. The acting Prime Minister is in fact his deputy, Prawit Wongsuwon, who was also one of the coup leaders. So it's not a huge change at the moment. What remains to be seen is what the court will decide in about 1 month's time. If the court decides that Prayut can no longer be the Prime Minister, well, again, there's questions about what that might trigger. He was appointed Prime Minister, so it stands that, in fact, the government could just appoint another Prime Minister to carry it through to the next election, which is due early next year.
So what comes next? What should we be looking out for? Do you think that this ruling could it open the door for the military-backed ruling party to hand power to pro-democracy parties? Could the politics shift quite dramatically from this?
Well, that won't be seen until there's an election, and the election isn't due until early next year. Until then, it's the most likely scenario that people are suggesting is that the ruling party will just hand power to another Prime Minister if the Constitutional Court does rule that Prayut can no longer serve as Prime Minister for the rest of the government's term.
Margot Towie there, Bloomberg's Asia-Pacific Markets editor, live for us there out of Bangkok. In fact, just speaking of Bangkok, in a couple of minutes here, we'll be getting the market opening up and just a 3-day look at the SET index set to open up. And given the price action, more broadly, we should be getting a slightly stronger open as the dollar just eases off a little bit the sting on risk assets. There's plenty more ahead. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
A quick check at latest business flash headlines now. Thailand's CP Foods says global pork prices will remain elevated, with the hog industry taking at least a couple of years to recover from the impact of African swine fever. The company sees high raw material and feed prices also adding to cost pressures. But the CEO told us CP Foods is seeing growth from European markets from a change in strategy.
It's getting better actually from European country. Now instead of meat, we export the ready-to-eat cooked food. This year we grow 20% into that area or into the European country.
Peloton surged the most in 6 months after the company announced it will sell its exercise bike and certain accessories on Amazon. Peloton products were previously only available through its website and retail showrooms. The one-time pandemic darling has been struggling with slowing demand and inventory buildup and strategy changes.
All right, well, all this is going on. We've got the Bank of Korea governor been giving his news briefing, as ever, having a look at some of the comments that he's been making. It's been about the overall economy. He was talking about what their 25 basis point move to the upside for their rate hike today, saying no change in that. But he's talking about exports clearly slowing, including those to China, saying that consumption's been better than expected and the economy, generally speaking, is holding up well under the current conditions. Now, this really, as he's also been, of course, pointing to some of the storm clouds, saying they're risk growing for the second half of the year. So there we go. That is a look of just the latest coming out of the Bank of Korea governor, David.
Yeah, glad he talked about China. So we are in the thick of earnings season, and just a recap of some of the big names we've seen. So 3 Bs and a meat, let's put it that way. And we'll get market reaction, of course, when Hong Kong opens up in about 2 hours from now. Ahead of that, though, a couple of earnings too coming through later today. Just a preview of big earnings. You have CNOOC, you have PetroChina, and a lot of big SAIC should be coming up, of course, if we still have that too on your screens. The aggregate surprise, Yvonne, generally has been negative 6.2% is on aggregate is what we've seen so far. So fairly disappointing. We'll see what happens.
Yeah, despite some of the beats that we've seen in some of these big names, overall picture still not looking too good. Of course, we're waiting for the afternoon session here in Hong Kong. That's going to be underway in about 2 hours of time here. Of course, a lot of questions about what's going to happen when it comes to market sentiment here. We're getting closer to Jackson Hole. We also have that China tourism group that also debuts here, a delayed debut today.
Yeah, and yesterday's trade was dominated by a company which is down 50% at one point.
Logan.
There we go.
Yeah.
Property again, very much in focus. So there we go. That's a look at the peak. The weather seems to be brightening up a little bit, but we're not a weather channel. Markets and more. Next, this is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
What are the moonshots at Amazon that are capturing most of your time and attention?
Well, we have a unique way that we look at big new investments, and I'm not sure it's right or wrong. It just happens to be our way. And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire quickly? And if we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do, and any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine, and in the long term, it tends to be a weighing machine. We have a concept we talk about a lot at Amazon, inputs and outputs. And the ultimate output for a company is share price, and then other big outputs are free cash flow or profit or revenue. You can't really manage the outputs. You have to manage at the input level, and that's where we spend all our time. And so if you do the right things for the business long term, things tend to work out. I think we've had very good returns for investors, and I expect that to be true again.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
Yes, it's about renewables.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound.
Okay.
And that crack is a sonic boom.
Yep.
I think the way they got a date was to impress the females by making loud booms.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
Is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a concierge startup that is shaking up city living. We'll talk to the women behind the company Alfred about why they see big opportunity and what they think about their early investor Adam Newman starting a different company that may be trying to get in on that too. Plus, Peloton on Amazon, the struggling bike maker, puts its bikes on the world's largest e-commerce site for the first time ever. Could it be the key to ending the slump? We'll discuss. And how did one of the biggest deals of the year come together? We will go inside the $70 billion Microsoft Activision deal with Microsoft Gaming CEO Phil Spencer. All that in a moment, but first, Tesla and Apple outperforming as investors brace for comments from the Fed later this week. Bloomberg's Emily Grafeo is with us. Emily, walk us through the day.
Hi, Emily. Stocks finishing the day largely higher, looking at the S&P 500 and the tech-heavy NASDAQ 100, both finishing up about 0.3%, largely in the green. A little bit of weakness in that final few minutes of the trading day. If you take a look at the more speculative areas of the market, though, not a lot of movement. Bitcoin not moving that much for Bitcoin. and semiconductors also not doing much. Really, traders are just waiting to know how hawkish is Jerome Powell going to be in that Fed speak on Friday in Jackson Hole. While they do wait, though, they do have a couple of earnings to look at. Nvidia falling down about 3% in the post-market. They talked about lackluster demand for components in computers. A little bit of better news coming out of Snowflake. That's a cloud company. They beat second quarter revenue up almost 17% in the post-market. Salesforce also falling in the post-market, talking about lackluster revenue. And at a final look at the trading day, I'm looking at Tesla. That stock falling about 12% today. This was the final day before they executed that 3-for-1 stock split that they did to finish the trading day. And also Peloton, that was really the big news today, up over 20%. It was the biggest intraday gain since February. They're going to be selling bikes and apparel on Amazon. A lot of Wall Street looking at Peloton. Their earnings are due tomorrow morning.
All right, Emily Grafeo, we will be across those results. Here to talk more about Peloton's partnership with Amazon is Wedbush Managing Director Dan Ives. Dan, what do you make of this? I mean, until now, you could only get these bikes directly from Peloton. Now you can get them on Amazon. Is it going to open the floodgates?
Look, I think it's a start in the right direction. I mean, the direct-to-consumer model, clearly it's been an uphill battle for Peloton, especially coming out of the pandemic. They had to do something. And if you're going to bet on someone, I think Amazon was the right move. But now it's an execution story going forward. And I think the street really needs to see that.
So, obviously Peloton has to work through, multiple other issues. They're, working on this, send the bike, you put it together yourself. Someone maybe can help you put that bike together. Does that make it all a little complicated?
Well, I think it does, and that's part of the problem. I mean, a typical Peloton buyer, they don't want complexity. They want simplicity. And obviously they've had some significant misses from product perspective on treadmill and some others. Strategically now they're cutting costs. Look, and I think that's part of the issue too, is that as you're in growth mode, cutting costs, especially with the competition come from all angles, gyms and other sort of fitness, I mean, this is clearly going to be a very, very bumpy path. I think this is a step, but obviously it's really baby steps in terms of what they need to do.
How many people are going to buy a Peloton on Amazon that didn't go to Peloton directly?
Look, I think it's probably low single digits, and I think it's really more about accessories or maybe part of the ultimate flywheel or ecosystem they're trying to build. It just comes down to that direct-to-consumer model. I think writing was on the wall. They need to change. Look, I think it's the first step. I could definitely see some more partnerships down the road, but right now, I mean, they're on the whiteboard trying to figure out what could ultimately move growth. And I think when it comes to Amazon, especially they had their ears open, it made a ton of sense strategically, I think, for both.
What do you make of the speculation about Amazon as a potential buyer here?
I think that's just more speculative. I mean, I would be just flabbergasted if they went after it. Strategically, it just does not make sense in terms of them going down that route. I think that's why this is more of a partnership. And I think the problem with Peloton now is that M&A chatter is obviously, fallen. And I think it really comes down to strategically what they're going to do. I continue to think when it comes to Amazon, it's more partnership, and it stops there.
All right, let's talk a little bit about Tesla. Shares rising ahead of that 3-for-1 stock split. How much of a difference is this really going to make?
Look, obviously, to the retail community, they're going to look back August 2020, the 5-for-1, what the stock did since then. But clearly a different market. But no doubt, I mean, they're doing it at a time that you're really starting to see demand continue to be firm despite what we're seeing in terms of storm clouds. It's really production story in China. That's the key of the Tesla story. They have never had a demand issue. They have a supply issue. And I think that's starting to get rectified. But I do believe the stock split, it really feeds the appetite of retail, and it was a smart move.
Meantime, another little Twitter kerfuffle.
Take hold. And I think that's why things like this become sideshows. But again, it's, Musk goes to beat a different drum that's not going to change.
All right, Wedbush Managing Director Dan Ives. Dan, thank you.
Thank you.
Coming up, We're going to be speaking with the co-founders of Alfred, a company that aims to change the, quote, future of living. One of their earliest backers is Adam Neumann, who, according to his latest investor, Mark Andreessen, is trying to do the very same thing. We will ask about that relationship next. This is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
Hydrogen has a very special place in the universe. It's the first element on the periodic table. It is the most abundant element in the universe. And when clean energy advocates think about what can we find which would be as easy to use as fossil fuels, they think about hydrogen. The fuel that will, when burned, only produce water.
We like to imagine that if we just built enough of these and these, we could ditch fossil fuels and save the planet. Unfortunately, it's not that simple. There are some things where you just need a good old-fashioned combustible fuel. Now startups around the world are betting that hydrogen can become the fuel of the 21st century.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London.
I'm going to be watching retail earnings from both Home Depot and Walmart.
Then surveillance for in-depth analysis.
Alongside Tom Keane and Lisa Abrambitz, I'm Jonathan Ferro.
Across the board, these are good numbers.
The big headline there is reaffirming the outlook.
How much does this give faith that you can get some sort of resurgence in consumer spending?
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game.
The venture capital scene is still in the midst of a big debate about funding and second chances. This after Andreessen Horowitz wrote its biggest check ever to WeWork co-founder Adam Neumann for his new real estate venture, Flow, a company portrayed in a recent Forbes article as being awfully close to another company he invested in 2 years ago. It's called Alfred, and it's a residential services company that aims to build community by fostering experiences within residential properties. Alfred's co-founders join us now, Marcella Saponi and Jessica Beck. Ladies, thank you so much for joining us, as well as Bloomberg's own Ed Hammond. So let's start here. Marcella, tell us why you founded Alfred, and the mission of the company today.
That's an easy one. So when Jess and I were working long hours and building our careers, one thing we thought about was how do we make the places that we live in anticipate and support us? And that ultimately that was a way to keep more women in the workforce. And that vision has evolved a lot to really thinking about housing as a whole. And for us, Alfred is really about making housing focused on the consumer, putting the resident at the center of the value chain. And today, housing is the largest asset class in the world and therefore should be the largest consumer product. But it's really lacking in terms of a branded experience, real technology, and a focus on the consumer as the end user. So we're excited to disrupt and evolve the industry with industry players and to give renters more for their rent check.
Now, the idea of tech-enabled property management is getting a lot of attention because, of course, Adam Neumann just got this big check. Before we go there, why do you think this is such a big opportunity, Jessica?
So I think that housing is one of the largest opportunities we have, both because of the lives that it hits, right? All of us consume housing, and no one's ever looked at it as a consumer product. And at the same time, I think housing is in crisis. If we look at the asking rents in most markets right now, they're 70% higher than they were for what's being paid. And we also have a housing supply problem. We need to build 5 million more apartments to meet the demand for housing. So given the impact that it can have on people's lives and the challenges facing it, I think it is ripe for a lot of attention and a lot of investment and a vision for what it can be.
Jessica, as Emily just alluded to, there is a lot of noise around this space at the moment, partly because of what Mr. Newman has just announced with his new venture, Flow. He had a relationship that previously existed, or maybe still exists, with Alfred and with you guys as founders. Talk to us a little bit about that, how you got to know him and his family office, and how that relationship really came to be in the first place.
So, at Alfred, we've always taken a very collaborative approach for building our business. And that started, 8 years ago when we started working with our initial landlords and partners. And among our partners, we don't only count Adam, but we count Greystar and Invesco and, our venture capital partners, NEA and Spark. And I think the key from our perspective has been to build a business by working with the best in the industry and doing that bottoms up. And that means being part of a broad ecosystem and seeking out people in that ecosystem that see something very similar to you and want to have a hand in building that future. So that's the approach we've taken for the history of how we've built the company, and is very much for how we met Adam.
And obviously, Alfred has its own product, a unique product. We've just talked about this idea of owning the future of living. What is it that Alfred does that is sort of unique and gives it some protection against new competitors potentially coming into the space and looking to disrupt residential real estate in a similar way?
So Ed, if you look at the apartment space in particular, which is where most of us are actually living, and renters, in fact, are going to be the majority of home dwellers in the future instead of homeowners. So multifamily really hasn't evolved since the invention of the elevator. That is like the biggest innovation that's had the opportunity to disrupt the space. And the reason why we believe that real estate, specifically residential, has been so resistant to disruption, today it takes only 1% of its budget and applies that towards technology, is because it's incredibly fractured. So to make a change, you can't just attack one part of the problem. You have to look at the entire value chain, and you have to align stakeholders in new ways that create value for everyone. So for us, what Alfred does that's so unique, we are the only prop tech company that's ever first really focused on the resident. We started with home management. We earned the right and the trust of consumers to provide services into the home. We then acquired a company that allowed us to build technology and automate the management of a full building. We then acquired a property manager that gives us full understanding of what it takes to drive an asset. And so what we're able to do when we put those three things together, which are very different businesses, but we create a flywheel. And we treat the consumer like they're the king. We add efficiencies with technology. We automate the entire resident experience from signing your lease, paying your rent, booking an amenity, booking a Peloton. And it doesn't hurt that we make the owner more money, but we also make the neighborhood around the building more vibrant. We bring services into buildings, and we really think about real estate as it's not just about the rent check. It's about looking at retail, at looking at the building itself as a retail center for lifestyle and gaining access to the consumer wallet. So we're expanding the pie for everyone, we're changing the value chain, and we're doing that because we have these different core competencies that have taken us 8 years of really hard work and evolution, building by building, shareholder by shareholder, building. Like, we have 150,000 units on our platform in 52 cities across North America and US and Canada. And we're really proud of the resilience we've had to be able to build what we believe will be a generation-defining company.
So Forbes has done some reporting on your experience with Adam Neumann and how his relationship with the company changed over the last couple of years. His representatives say he believes that the article is inaccurate and that he and his family office still support the company. What's your response to that and your assessment of this reporting? So it's a great question, and I think a lot of people are asking probably similar questions. But the thing that I think is important is not necessarily
what's accurate from a reporting perspective. It's what are we really focused on building, and what have we done already to get us to this place? I think that this is a huge market, and a lot of people see the opportunity here, and that is something worth investing behind and investing in. And as Marcella said, the thing that we're really focused on at Alfred is this of what's possible in this market. We have 150,000 units, but that is small compared to the overall market size, not just in the U.S., but globally. And I think that's really where we should focus the conversation and bring the resources, whether they are part of our company or part of other companies, to bear in solving what housing can be in the future.
That said, Mark Andreessen wrote in a blog post that Flow aims to build, quote, the future of living. And if you look at your website on the homepage, it says, welcome to the future of living. I know that that can mean a lot of things, but how do you feel about that? And do you believe there's a conflict of interest here?
Andreessen is a storied firm and a fantastic investor, and we're excited about the attention that they're bringing to the space, obviously with the largest check they've ever written. We have raised ourselves $100 million over 8 years, and there is a difference between those two numbers. And we do see the opportunity to continue to expand to our investor set. But I don't want to comment on other businesses as much as I really want to focus the conversation on ours.
Marcella, just on the question of funding, and look, obviously, Andreessen has put in a very large amount of money now into this space, which suggests they have serious appetite here. Have you guys, has Alfred had a conversation with them about getting backing? Is it something you would now look to do? Clearly, as I say, they are very interested in the space.
Yeah. So, we have lots of investors. We're talking to lots of investors. But one thing I would note is that the company is on a path to profitability, and we are a self-sustaining company that's been doing work for 8 years. This is not an idea that is on a whiteboard. We really feel like we have the horse by the mane, and there's something really big here. In terms of talking to other investors, especially ESG investors, we have a ton of appetite. I would say that one thing that I hope a positive silver lining that comes out of this is the way we think about venture, especially for female-led companies. Only 2% of venture dollars in the past year have gone to female-led companies, and that's shrunk year over year. And I really want to put some emphasis here in saying that female-led companies are no less, the ideas are no smaller, and our ability to execute is no less. And I think that there's a huge arbitrage opportunity for backing female founders, and especially in this space. And I believe that the future of living will require lots of collaboration across many different companies, and that's the new form of disruption, especially where we require so much change across so many stakeholders in a very complicated value chain.
Jess, I'd love to give you a chance to weigh in on this question as well. Obviously, we know that women are historically underfunded in Silicon Valley, have a much harder time raising money, and here we have, idea aside, a controversial male founder getting a very big check. What sort of feelings, what was your reaction to that number?
Yeah, I think that, it's a great point, and it's certainly not lost on us. I think the positive sort of view of it is it's time for a lot of investment to go into this space, and this is raising the awareness and the visibility of housing and the rental residential real estate market as an opportunity. And I think that size of check, particularly from Andreessen Horowitz, which is a terrific company, really validates that market and puts a spotlight on what, I think hasn't been as visible previously. So, I think Marcella spoke to some of the other elements of it, but if we kind of look into the future, we can take that as a benefit for sure.
Obviously, both of you have worked very closely with Ms. Newman in this company and sort of over that period of time in the relationship. Now looking at him starting his own business in the space, whether or not it competes directly with what you guys do, what is it going to take for Flow to be successful in this market as it comes in as a new entrant?
I think, as with any business entering a market, it really comes down to understanding the customer. And when we started Alfred, we started by focusing on the resident and focusing on the way that we could impact their life and give back time past the front door of their home. And that's how we really built the company, by listening to what does a resident need, what does a consumer need in the housing market, and how can we begin to deliver that. And I think that is going to be true of all businesses entering this space, and probably not only just for the resident, but how can we make the operators, the folks that work in these buildings, lives easier? How can we elevate all of the attention in this space just for the benefit of everyone? And listening and really thinking from the consumer perspective and the customer perspective, I think, is critical for that.
So bigger picture, obviously, we are battling inflation. You've got consumers under pressure. We are potentially going into a recession. You know, how do you assess how many people are going to want to pay more for the kind of services you provide? Do you see this as a luxury or a necessity? Marcelo, I'll let you take that.
So I think the really important thing that we are doing is it's not about increasing rent prices. It's about how do we do things more efficiently. How do we use technology to automate processes, to anticipate needs, to deliver services that allow new revenue to come into the building, and effectively increasing the size of the pie, not just by asking the resident to pay more. And we really think that, as you've seen, the rental prices and increases to the rental housing market have been so extreme, and there has not been a subsequent increase in the value proposition. You're still getting those four walls. And what we believe is fundamentally people want to rent a lifestyle and rent a home, and that we can provide that with putting our technology in, staffing these buildings a little bit differently, training people to hotel standards, moving property management from a focus on maintenance and rent collection and trash collection to really, how do we make a resident's life fantastic? How do we build a community? How do we make people feel a sense of place and a sense of home? So it's not just about how do we jack up the rent prices, it's how do we serve the consumer in a better way.
All right. The co-founders of Alfred, Marcelo Sapone and Jessica Beck, thank you both so much for joining us, along with our very own Ed Hammond. We will be right back. This is Bloomberg.
SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
We were thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year, and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest of the industry were doing.
stories we continue to watch. Shares of the latest meme stock, Bed Bath & Beyond, jumped after a report the home goods retailer has found a lender to provide financing. Bed Bath & Beyond is trying to boost liquidity and reduce debt. The company has fallen 62% since the rally peaked last week, and investor Ryan Cohen's firm sold its shares. Coming up, how the Inflation Reduction Act could change how we do our taxes. That is next. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Bloomberg Green, bringing you the business, data, and innovators fighting climate change.
Reinventing climate news on TV, Quick Take, and Bloomberg.com.
Regulators are taking a close look at how Twitter calculates the number of spam and bot accounts on its platform. In June, the SEC wrote a letter to Twitter's CEO asking to disclose the methodology used in calculating the bot situation. In response, Twitter's lawyers told the SEC that it already adequately discloses the methodology that it uses. Twitter's estimate has become a central sticking point between the company and Elon Musk, who's looking to walk away from a $44 billion buyout of the platform. Here to discuss, Bloomberg's Kurt Wagner. So, Kurt, bring us up to speed. Obviously, there was another hearing today. The whistleblower allegations we learned about yesterday. Now, potentially the SEC is involved. How so?
Yeah, well, the allegations from the whistleblower kind of hit on two important things. One, as you pointed out with the SEC, is that, he claims that Twitter's been lying to shareholders, right? If the company is indeed hiding the number of bots that make up, part of its user base or something like that, that could be a securities violation, and that could be a huge reason for the SEC to investigate. Now, on the privacy side, a lot of these allegations were also that the company wasn't doing enough around privacy. Twitter and the FTC got into a consent decree back in 2011 that the company would make all kinds of changes to its privacy practices. And this whistleblower says the company hasn't done that. So now both regulatory agencies essentially have a good reason to, at the very least, ask Twitter what's going on and seek clarification about what this whistleblower claims.
What happened at the latest hearing, and how does it potentially move the ball forward?
Well, the two sides have been fighting for a while as to who should be bringing the information about bots forward, right? Elon Musk and his camp basically say that Twitter has not been forthcoming. Not only have they not shared the information with him directly, but they're not being willing to put forward employees who do have access to that information or expertise, right? And Twitter, of course, is arguing the opposite. Hey, we put everyone forward that needs to be. So right now, they're trying to settle that in court. One of the issues is that Musk's lawyers, they want access to this whistleblower, right? They think he certainly qualifies as someone who would be an expert on this kind of stuff. So they're working with the judge right now to basically figure out who does Twitter need to put forward and make available as part of this trial to answer some of those bot questions.
Now, obviously, we're still learning more about these whistleblower allegations. I'm curious what you're hearing from your sources. I'm hearing that, Twitter is looking at the same redacted document that, appears in the Washington Post. There's a lot of information that is, not there or that they can't see. What more have we learned about this complaint and the intentions of the person making the complaint?
Yeah, I mean, I can tell you there's a lot of people who work at Twitter now or recently who are not happy with this, right? And that sounds obvious, but they see this as either unfair or certainly not reflective of what they truly believe to be happening at the company. And the timing is very suspect, right? Because a lot of these claims seem to echo at least some of the stuff that Elon Musk and his lawyers are saying. And so there was an all-hands meeting today with employees. I think management, my understanding, has reiterated a lot of the things that we read in the email from CEO Parag Agrawal yesterday, Emily, when we were on the show, right? That he was basically saying, hey, this is false. These allegations don't have any merit to them. But, at this point, if you work at Twitter, you're just frustrated. You're annoyed, right? You're going through this whole process already. Then this allegation comes on top of it. It just kind of is snowballing right now, I feel like, for the company. And I start to sense that when I talk to people who are there or who were recently there.
Right. It's been going on now quite a while, many months. Okay, Kurt Wagner, thank you for that update. Appreciate it. Turning to earnings, Intuit's fourth quarter report, better than expected, led by the company's small business unit, which grew 20% year over year. But some of Intuit's businesses facing headwinds from government changes to the tax system, including part of President Biden's Inflation Reduction Act, which allocated money to study the creation of a government-run tax filing system. Here to talk about all of that, Intuit CEO Sasan Goodarzi. Sasan, let's start with the numbers. Obviously they looked good. Interesting to see the number of small businesses increase coming out of a pandemic. How is this informing your outlook?
Hi, Emily. Thank you for having me. We're excited about our outlook. When we look at the macro environment, there's two things I would say. One, small businesses do worry about the economy. However, at the same time, consumer spending is strong. The small business performance is strong, but they're trying to manage, the rising inflation, the costs going up with their supply chain, costs going up with workers. So they're working through managing all of that, but they're very resilient. If I then shift to our platform, it's really why our platform is probably more mission critical now than ever before. We are not a line item on a small business budget. We are the platform that they use to be able to power their prosperity and run their business, which is hence reflected in our results, but also reflected in the overall company guidance that we provided, and specifically the segment guidance around small business. So we are excited about the future.
I'm curious what demand trends you're seeing. You've got other software ventures seeing lengthening sales cycles. I'm wondering if that's something that you're finding as well.
We're not seeing that because the small businesses, Emily, that we serve are either a one-person shop or all the way up to about 100 employees, and these small businesses really use our platform to be able to manage their customers, grow their customers, to be able to manage their cash flow. So these are not really enterprise sales, so we don't see the sales cycle extending. In fact, what we are seeing is just more reliance on our platform, especially in this environment, to be able to fuel their success.
I do want to ask about this Inflation Reduction Act situation. Part of this involves money to study the creation of a government-run tax filing program, which could completely disrupt TurboTax, one of your key products. How much does that concern you?
Yeah, well, first of all, to set context exactly as your question states, the IRS got about $15 million to do just a study of what it would take for the IRS to create a tax platform. With that as context, the first thing I would say is free taxes is available to all Americans through private industry, whether it's us or our competitors. And so from an availability of free software, it's already available. I think secondly, we're big advocates for the consumer. They know the story of their life better than anybody else when it comes to deductions for their taxes. They really know their story better than anybody else. And I think we'll have to let the consumer decide, what is most important in terms of where they want the IRS to focus. Is it about the refund experience, or is it about creating tax software? For us, it's really an immaterial event. It's a non-event because free tax software is already available to all Americans, and this could yet be another free tax software. So that's the way we see it.
That said, I mean, you have to be planning ahead. Are you thinking about strategy, contingency plans, if something like this could come to fruition?
Well, really not, because we already have free software that, if you look at the last 9 years, we've served over 113 million consumers that have filed their taxes for completely free. This past year was about 13 million customers. So it really doesn't change anything that we are doing. We have a platform that you can do it yourself, and for certain customers, it's free. We also have now a live platform that gives us the ability to serve the assisted market, those that need expertise, which is really our biggest growth driver. So it really doesn't change our strategy at all. And frankly, I think the government has been back and forth for the last 25 years thinking about exactly this study. And for us, it really doesn't change anything.
You also recently appointed a new leader of the MailChimp division. Talk to us about the strategy there and how you see this continuing to fit into the business longer term.
Yeah, Emily, we're very excited about MailChimp. The whole reason why we acquired MailChimp is it plays a role in helping small businesses grow customer base. So it helps them market to new customers on different channels. It helps them manage their existing customers. And one of the things that, we see as a huge opportunity is to how to marry a platform capability that not only helps a small business grow their customer base, but manage their cash flow, which is where QuickBooks comes in. And so bringing those two platforms together allows us to have a one-stop shop to really fuel the prosperity of small businesses. And MailChimp has incredible capabilities. We just appointed a new leader to work hand in hand with the team there, Rania. She has been actually leading our payments group very successfully. And now she's going to be leading both MailChimp and payments. And it's an opportunity to really marry growing customers and managing your cash flow in one place. So we're really excited about the opportunities ahead.
All right, the CEO of Intuit, Sasan Goodarzi. Thank you, Sasan, for joining us. Good to have you back.
Thank you.
All right, coming up, could Bitcoin fall even further? That's what some technical analysts are saying. We're going to get the take from the financial services firm Valkyrie next. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound.
Okay.
And that crack is a sonic boom.
Yep.
I think the way they got a date was to impress the females by making loud booms.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
For our crypto report, as both Wall Street and the crypto world are waiting to hear from Fed Chair Jay Powell at Jackson Hole this Friday. Bitcoin, meantime, could be headed for another downward slope, with the largest cryptocurrency down more than 50% this year already and sitting in a range of about $19,000 to $25,000. Let's bring in Valkyrie Chief Investment Officer Stephen McClurg for his read on this, along with our own crypto contributor, Shanali Basic. Thank you both so much for joining us. So, Stephen, do you think Bitcoin has further to fall, and how far? Like below 20 or not?
Absolutely. Thanks for having me. Well, I do believe that Bitcoin has a little bit further to fall from where it is today. We are pretty close to the bottom. And from here, I think in the long run, we're going to be doing just fine. But really, everything depends on macro at the moment, inflation, as well as what risk assets do in a hawkish Fed.
Hawkish Fed, I think about the letter that Dan Moorhead of Pantera wrote to investors. I got it in my inbox today, and this idea that rates are going much higher than is expected. How is that going to play into where Bitcoin goes next?
Yeah, so anytime that liquidity is being taken out of the system, which is what's happening right now, all risk assets will continue to fall. So Bitcoin, luckily, and also unfortunately, earlier this year, did fall quite a bit due to some local contagion risk. But Bitcoin was the first asset to go. We're waiting for the rest of the financial markets to catch up. And by the way, I agree with Dan that we do have a lot further to go as far as rate hikes. Mm-hmm. We think rate hikes, we think we'll see the Fed target rate somewhere between 375 and 400 by the end of the year.
So what does this mean for non-Bitcoin crypto assets? What does it mean for Ethereum, which is about to hit a really pivotal moment in its life cycle? People fall on two sides of the merge here. You have some that are selling into the merge, some that are kind of Bitcoin maxis here that are really more focused on the benefits that mining provides. How do you feel about this move to proof of stake?
Well, I don't necessarily think move to proof of stake is a great thing for Ethereum in the short run. In the long run, it might actually work out. But the Ethereum network is actually more secure as proof of work. And that's what really makes Bitcoin the most secure network, is a long period of time through proof of work, where essentially you have computers or validators that are validating transactions all over the world in a decentralized manner. When you move to proof of stake, that really falls into the hands of a few. And those are the ones that stake their tokens to master nodes or validators. This is how some other more enterprise-related blockchains work, such as Avalanche or Zilliqa, where there's a more enterprise application. But in terms of Ethereum goes, the security will need to be seen how that's going to work out, because we really think that if you're holding, say, $1 million plus NFT, and you're relying on the Ethereum network and it's changing right now, that may not be a great place to be right now.
Okay, so where are you placing your bets? Obviously, Valkyrie has exposure to, the largest cryptocurrencies by market cap. Which ones are you leaning into and leaning out of?
Yeah, right now, Bitcoin is really the flight to safety for a lot of our funds, and where we're really looking at. Some of the more established proof of stake protocols are also a great place to be. Places like Avalanche and Zilliqa. So these are the ones that we're really looking at to move into. We also have active accounts where we can take risk off the table in times of uncertainty, like we did at the beginning of this year through most of the year. So we're really moving out of anything that has too much exposure to ETH right now until we see this merge goes through sometime in middle September, and into some of the safer, larger crypto protocols.
What about Solana? How do you feel about that, given more of the NFT ecosystem is also going towards Solana? You think about Magic Eden and the success that they've had there. But also very polarizing in terms of an asset. Do you think that has any room to benefit if some of the things you're saying about Ethereum plays out?
Yeah, Solana is really one of those blockchains that sacrifice security for speed. It's still a work in progress. I don't think it's necessarily a flight to safety, especially if you care about security right now. And that's really our biggest fear on Ethereum is, will it turn out to be in this new entity as proof of stake protocol, more like Solana and a lot less like Bitcoin. So we're cautious on Solana, though we're not selling it.
Where does Ethereum end the year? Are you selling Ethereum?
We think that Ethereum very well could get back to 1,000 or even lower if the merge doesn't go well. If the merge does go as expected, and by the way, there's not a whole lot of doubts out there that it won't, but there is a big risk that it will, then we could see Ethereum really rally. So we're kind of holding off until September before we make any big bets on Ethereum.
All right. Valkyrie Chief Investment Officer, thanks for helping us navigate all the different things you're working through. Stephen McClurg, appreciate it, along with Bloomberg's Shanali Basic. All right, coming up, how Microsoft hopes to change the workplace culture, often called a toxic workplace culture, in the gaming industry. That is next. This is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Hydrogen has a very special place in the universe. It's the first element on the periodic table. It is the most abundant element in the universe. And when clean energy advocates think about what can we find which would be as easy to use as fossil fuels, they think about hydrogen. The fuel that will, when burned, only produce water.
We like to imagine that if we just built enough of these and these, we could ditch fossil fuels and save the planet. Unfortunately, it's not that simple. There are some things where you just need good old-fashioned combustible fuel. Now startups around the world are betting that hydrogen can become the fuel of the 21st century.
Microsoft's head of gaming, Phil Spencer, says he is optimistic the company's $70 billion deal to buy Activision Blizzard will be approved. If that happens, Spencer will inherit a video game hitmaker with a controversial leader. I spoke with Spencer for a wide-ranging interview in the latest edition of Bloomberg Studio 1.0. Here's some of our conversation.
You know, I kind of come at this that big deals should be scrutinized, right? I think that's the role of regulators, why they're in place. I feel good about the progress that we've been making, asking good, hard questions about, okay, what is our intent? What does this mean? If you play it out over 5 years, is this constricting a market? I feel good about it.
So you're confident the deal is going to happen?
I've never done a $70 billion deal, so I don't know what my confidence means. I will say the discussions that we've been having seem positive, and we're actively engaged in the conversations, trying to be transparent about what our motivations are.
Well, Activision specifically is facing a lot of challenges here. There have been lawsuits, there have been employee walkouts, there have been accusations of sexual harassment, sexual assault. How much did that concern you when you were thinking about this deal?
We had access to data from the company before we announced the acquisition to see what the actual numbers were in terms of reports. We definitely, as a team, signed up to say, just like we're on our own journey with Xbox, that we're going to expand that journey if this deal closes. It's a lot of people, and a lot of people that will feel very dedicated to and committed to building a great workplace environment for them. That's true of any of our studios, right? But it's obviously a conversation that you're going to have. You think about the board of Microsoft, and when they're thinking about the deal and they're typing into their search engine, Activision, what are the headlines that they're coming back? And there were questions that we had. We've learned from this. We will continue to learn, and we're committed to that journey, not only for the betterment of our teams, but our customers, the creators on our platform. We think it's critical to our business success that we make progress here.
Is Bobby Kotick going to stay on?
Yeah, I'm not in a position to make comments about their leadership team. We're in the regulatory phase and how that will close. Like when the deal closes, then we have say in how they're managed and how it goes. But until that point, I'm not really in a position to say.
There have been very specific allegations of Bobby being aware of things that happened and not reporting it to the board. What has he communicated to you about what he knew, what he didn't know?
The discussions we've had were about the teams, where they're at, can they make the progress they need to make, because the closing is a long process. Are they putting in the work that they need to put in to move along their journey? And I believe they're committed to that. When I look at the work that they're doing now, there's always more that can be done.
Activision has divisions that are unionizing, and I know Microsoft has said they'll recognize those unions. What does that look like?
I've never run an organization that has unions in it. But what I can say in working through this is we recognize workers' needs to feel safe and heard and compensated fairly in order to do great work. So we thought it was important to make a public statement on that front for workers that are there that are making decisions about their employment and how they want to, what that relationship looks like, to understand what it would mean if Microsoft was able to close the deal.
You can watch my full interview with the Microsoft Gaming CEO, Phil Spencer, coming up 9:30 p.m. Eastern Time right here on Bloomberg Television. And that does it for this edition of Bloomberg Technology. Thursday, John Wu of Ava Labs joins us to talk about the latest with Avalanche and the crypto downturn. And don't forget to check out our podcast. Find it wherever you get your podcasts. I'm Emily Chang in San Francisco. This is Bloomberg.
SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
You will put a woman on Mars. You will be the first chief crypto officer because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy, I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
We were thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year, and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest of the industry were doing.
However you get your news.
This is Bloomberg Daybreak Middle East.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Daybreak Middle East. Our top stories this morning. Inflation is front and center as central bankers from around the world gather in Jackson Hole. The spotlight is on Chair Jay Powell. Just how hawkish will his message be? Emmanuel Macron warns of sacrifices ahead of an era of abundance comes to an end. Meanwhile, Invesco says autumn will be a rude awakening with commodity prices soaring ever higher. And Hong Kong scraps the morning session of its 5.1 trillion stock market due to tropical storm, delaying the debut of the city's biggest IPO this year. And as Iran nuclear deal appears to be edging closer, Israel's prime minister says his country opposes the plan and will act to prevent the Islamic Republic from acquiring nuclear weapons. It's just gone 8 a.m. across the Emirates. Warm welcome to the show. I'm Manus Cranny in Dubai. The short end of the yield curve is in the firm grip of the vice of the Boers. Medium-term inflation expectations, according to Standard Chartered, are sticky. They are rising above the very short term. That drives the short end of the curve higher. And the nerves are really jangling ahead of what Jay Powell will say. Morgan Stanley and Bob McHaley sparred out on Bloomberg TV. They warned we've yet to understand the impact of QT on this bond market yet. More of that in just a moment. So the bond market is definitely trying to work out whether we're near the peak of rates. What are they? There you go, 2-year yields over the past 4 days. But FCON is still as louche can be. It's weaker. It's as easy in FCON terms as it was since before the Fed began to raise rates. Louche, I call it, louche. Now, the oil market, well, the Saudi royalty speaks and the clack follow through. Oil is up, as you can see, over the past 4 days by over 5%. We now know where the put option is for Saudi Arabia, nay OPEC. It is at $90, which is the 6-month low. Algeria, Kuwait, Equatorial Guinea and Venezuela all come out voicing support of the statement from Saudi Arabia that there's the disconnect and there may be a need for cut. Invesco warn a rude awakening will come in this oil market, by the way, as the SPR, that's the Special Petroleum Release, our reserve release, comes to an end in the autumn. So those are your markets. Bond markets, the nerves are jangling, and the oil markets are bid. Let's get to Jules. She's got the Asian market wrap. A little bit of a soupçon of Chinese, let's say, stimulus. Jules.
Indeed, nothing like $146 billion worth of promised stimulus to lift these markets, Manus. For the first time in 6 sessions, we are seeing quite a strong momentum coming through across the markets that are open. Worth noting, Hong Kong closed for the morning session due to that Typhoon 8 signal that was lifted, but it has been reduced now to a T3. So we will see Hong Kong come back online in around an hour's time. But certainly that expected stimulus again from Chinese authorities to really try and prop up the economy, giving a boost to equity markets and also to the Aussie dollar, which you can see is gaining around 0.5% against the greenback. Also seeing some strength coming through in the Korean won, although Korean bonds are pushed lower. This after the Bank of Korea did raise rates as expected from 2.25 to 2.5%. They've also raised their inflation forecast for their highest projections since 1998. And let's flip the board and have a look at what we are seeing in the yuan as we continue to see the currency hold near this 2-year low. But the PBOC did set a stronger than expected yuan fix amid the currency drop. In fact, the strongest fix that we have seen since February 2020. Now, Pei Chen Liu over at NatWest Group says this is clearly a signal from the PBOC to slow the pace of the yuan depreciation, and Maybank says it's a move to stabilise the currency ahead of Jackson Hole. Manus.
Jules, thank you very much. Juliet Sally there with the very latest on the Asian markets. The central bankers, as we have said, from around the world, they're gathering in Wyoming for the Kansas City Fed's annual symposium. The spotlight is on the chair, Jay Powell, on just how hawkish will his message be. Our global economics and policy editor, Kathleen Hayes, is in Jackson Hole. She's holed up in a cabin somewhere there. You got security with you, Kathleen. Good to see you. What do we expect?
We expect Jay Powell to do what the Fed chair does every year, the Kansas City Fed Symposium, and that is step up to the microphone at 8 o'clock Mountain Time and give a speech. And the speech can be in depth. The speech can be about the economy. The speech can be about many things. But what everyone is hoping for is that Jay Powell is going to find a way to make it clear to people what his intention is bring down inflation, yes. How aggressive is he willing to be? Is he willing to forego a soft landing to be as maximally aggressive and hawkish as he needs to be? Is he going to kind of continue to put that soft landing on the table as a possible or even likely outcome for the Fed? Is he going to somehow give us a sense that right now the Fed is concerned about continuing to front load because that's a way to hit inflation hard, hit inflation expectations? I mean, there's so many questions, but the bottom line answer is that everybody wants to know is where does he stand on this? Markets have shown either that maybe they're not listening to Jay Powell, maybe they don't believe Jay Powell, maybe the Fed blew it on thinking inflation was transitory for so long that when they say they know what the problem is now, people kind of still wonder about it. To me, it's interesting that in many ways, it seems to me Fed officials have made it pretty clear that they're going to keep hiking rates, that they're ready to do this. But I would say a number of people still wonder, and that's the question Jay Powell has to answer. We'll see if he's going to choose to do it on Friday morning in Jackson Hole, Wyoming.
Yeah, well, of course, there's the other gathering, isn't there, the Nobel laureates. Of course, in Germany, you're saying go too aggressive, go too fast. And they chime, of course, with what Mohammed El-Erian says, you could just break something. Get some seat, Kathleen, because you are going to have a long couple of days. We're expecting a lot. Your program expects a lot. Kathleen, we'll see you later on. Enjoy yourself in Jackson Hole there. Kathleen Hayes in Jackson Hole. So we have a whole host of things to go through in these markets. We've got Jackson Hole. We've got stimulus in China from my colleague in Asia. Now, I want to dig a little bit deeper into the China stimulus story. Ndvr is with me. He's our chief economics correspondent. He's in Hong Kong for us. Enda, good to have you with me. So let's begin with stimulus. Another round of stimulus from the Chinese and an 18-19-point plan. What are you more impressed about?
Well, again, it just speaks to the idea of more urgency among the Chinese authorities, Manus, that they recognise now the depth of the slowdown. In fact, they have even acknowledged that the slowdown has been beyond their expectations so far. Premier Li Keqiang said that. So we're starting to see this ramp up in a response. And the big takeaway today, like you mentioned, is this new dollar figure of well over $100 billion worth of extra spending at the local government level to try and get things going, to rev things up. But again, the point here is, yes, it's an increase of stimulus for China's economy, and yes, it's another sign of urgency, but the issue is nobody's fully convinced it's going to turn around the economy until either A, they pivot hard on the real estate story, or B, they somehow map a roadmap to get themselves out of the COVID zero strategy that's kind of hammering the consumer side of things. So I think until either of those two policies are addressed, nobody's convinced that they're doing anything other really than keeping their finger in the dam and basically keeping things stable until at least we get to the big important Congress in a few months from now.
And as you say, there's a lot of political undertones for Xi Jinping to consider. And Karen there with the very latest from Hong Kong. Now, as I said, China are pledging more stimulus aimed at stabilising the slowing economy. The State Council is now earmarking an additional $43 billion in unspecified policy and financial tools. Let's get to our North Asia correspondent, Stephen Engel. So, Stephen, I'm hearing the word toolbox specifically referenced in these statements. What do you make of the 19-point package? So we're going to get back to Stephen in just a moment and build on that narrative that Enda and the story overnight in terms of stimulus and infrastructure spending will bring to bear on markets. We're going to take a pause and get deeper into these markets in just a moment on Bloomberg.
This intersection in Kansas City is in the Westport area. It's a very wide intersection. Cars never stop for pedestrians. The Asphalt Art project from Bloomberg Philanthropies allowed us to not only make this intersection safer, but also make it beautiful. By creating a four-way stop, we slow down traffic. By extending the curbs, we shorten the pedestrian crossings. We can now walk down the street and see these incredible murals. We made it much safer for motorists and pedestrians, and we've combined art and safety for everyone to enjoy.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, of the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
For Italy in terms of what happens politically and then what the economic fallout is.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
China is pledging more stimulus with the aim to stabilize a slowing economy. The State Council is now earmarking an additional $43 billion in unspecified policy and financial tools. Let's bring our Chief North Asia correspondent Stephen Engel into the conversation. Steve, obviously just chatting to Enda on the economic side, this 19-point package. Do you get the sense that this is to try and allay our global fears that this is going to be a hugely inflationary package of stimulus? What is behind the 19-point plan?
Well, they've actually cautioned as well, the State Council, in that statement from their meeting yesterday, chaired by the Premier Li Keqiang, that they're not going to be flooding the economy with excessive stimulus. Essentially, when you break down this 19-point plan, it actually, as the morning went on here in Asia, we started tallying up the latest numbers that the State Council was talking about, and it tallied up beyond $42 billion US, actually 146 billion, a trillion yuan of potentially fresh stimulus. But when you start winding it down and peeling back the onion, you realize that $42 billion US of that is new commitments, basically allowing the state-owned banks to invest in infrastructure projects, the tried and true old playbook. That's on top of 300 billion yuan or 42 billion US dollars that they had announced in June. So that was already existing stimulus that they announced. In addition to that, we also kind of broke down another 500 billion yuan in basically special bonds for the provinces to tap into that was unused in previous announcements. So in all total, it's 1 trillion yuan. It's a lot of money, obviously, but really new stimulus, you have to kind of peel that back and say, they obviously realize that there are headwinds in this economy on top of zero COVID, on top of the property sector, on top of the power problems and the disruption of manufacturing down in the South, which is more temporary in nature, and that they do have to stimulate. However, they're still very concerned about over leveraging, especially in the property sector. They just want to stabilize things ahead of the all-important political confab that is coming up here in this autumn at the party Congress.
And then, Steve, the other big sort of subplot story that's going on around the world is in the foreign exchange market. Now, if you look at the yuan in and of itself has not collapsed by anywhere near as much as the euro or indeed as the yen. I think the yen's down 16% year to date, euro's down 12%, and the yuan's down just under 7.6%. You've watched these markets on many occasions. Is this, at any other time we'd probably be screaming from the rooftops about the yuan's down nearly 8%, and yet that's not the narrative that's being espoused. How important is a weaker yuan to the China recovery story?
Well, it's important to a certain degree. Obviously, it's going to help the exporters, and the export side of the economy is very critical at a time of very uncertain global demand, obviously. And they did allow the yuan to weaken, to 6.8 at 6.9, almost. We're getting closer and closer to 7, obviously. But I think with the daily fixing now coming stronger than expected, it looks as though authorities are trying to put a floor on the yuan's fall amid, of course, a stronger dollar and ahead of Jackson Hole and the Fed's potential even more hawkish verbiage coming from Jay Powell. Put a bit of a floor on the fall and see where we go from here.
Steve, thank you very much. Our Chief North Asia correspondent there, Stephen Engel, with the stimulus 19-point plan and the currency volatility. Plenty more ahead this day on Daybreak Middle East. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the US shaped the 20th.
We are in a period of extreme uncertainty.
We've learned there can always be a new unanticipated shock that pushes it up or down. Of course, the way the Ukrainian war goes could have a huge impact, and that's very difficult to predict.
So I'd say that we are in the worst, and that's why I think that we need more of a gradualism, so it's not to shock expectations too much.
I think there is a real risk that the central banks act too aggressively, raising interest rates too fast, too far.
It could also happen if fiscal policy worldwide is on average much too expansionary. We could have no recession because we failed to succeed in bringing inflation down.
The Nobel laureate speaking about their outlook for the global economy, and market angst ahead of Jay Powell's speech tomorrow is centered around whether he will rebut expectations that slowing growth will temper monetary tightening. Financial conditions, as I've said, have loosened up since the Fed started their tightening, and the Nobel laureate Joseph Stiglitz warns that overly steep hikes could be even worse for inflation. Let's see whether Mehvesh Ayub, senior investment strategist at State Street Global, concurs. Good morning. Welcome. Good to see you. So the warning from Stiglitz, Sims and Pissarides is go judiciously, go gradually, be careful not to be too aggressive. When you look at Fed moving thus far, it's hardly aggressive given inflation at 9%, is it?
Well, I think it very much depends on what the market expectation was. I mean, if we go back just a couple of months, and I think this is really what is the source of volatility in the rates and equity markets at the moment, is how quickly the narrative changes. You know, from the market pricing in 25 basis points at each rate hike through to 50, and then the surprise 75 basis points. I think it also doesn't help that we no longer have that kind of clear forward guidance from the Fed at a time when uncertainty is very high. And to me, it surprises me a little bit when I think about a lot of the sort of flurry of expectations, activity, even sort of what the options markets are pricing in ahead of Jackson Hole, because again, you know, a couple of weeks later, when we get the latest CPI print, the narrative could change again. And I think this is really, when we think about what is causing the volatility, is we are having quite significant turns, whether it's in data, whether it's really from sort of the Fed narrative, or whether it's sort of market sentiment.
Well, what would take some of the volatility out at Jackson Hole? What does he need to communicate to lessen the vol and smooth the road to, I'm looking at work, 3.77, excuse me, by March of next year. How does he deflate vol?
I'm not sure he's in a position to really do that. I mean, like I said, there needed to be an element of clear forward guidance, which we no longer have. The Fed continues to be very data dependent, and no one really knows what the data is going to show us. There is potential that we've, you know, peaked in terms of month-on-month inflation based on July numbers, but no one really knows.
Well, let's just talk about that. We've got medium-term inflation expectations from Standard Chartered this morning. Steve Englander, in his note, put this out, which is that the medium-term inflation expectations, yes, you've got all this narrative about, oh, inflation expectations are rolling over at the short end, but medium-term inflation expectations are spiking, and they're spiking higher. They're at the highest level since 2004. So the reality is inflation expectations are, I would say, becoming moderately unanchored.
Yeah, I mean, my sense.
So they better not stop. The Fed better not stop. In the eye of that data, hard data, in front of you, that's what the market thinks. If they pause now, it's folly.
I actually agree. I think the market is really trying to justify a bear market rally and is looking for that dovish pivot from the Fed, and it's unlikely to get that. And this is, to some degree, what is causing a lot of this volatility going into Jackson Hole. But I think we have to continue to expect this volatility, not just ahead of Jackson Hole, ahead of any sort of narrative from Fed officials, any inflation data releases, and actually broader economic growth indicators like global PMIs, which are really trending downwards now. And, you know, I still believe that the Fed is going to continue to go after inflation at the expense of growth.
Which justifies, in some ways, your current underweight equity position. You maintain your equity underweight. I should just put that in as a caveat. Where are you most suspicious of? Or are you saying, actually, Manus, I've had the summer of love, I will take some money off in the US? How are you constructing this equity underweight?
So the equity underweight is actually largely in US equities. So we have actually shifted away from US equities more towards European and Asia Pacific, and that's based on sentiment, momentum, and valuation expectations. Also the view that actually large cap US has suffered quite considerably. Tech is very much at risk with the higher rates, and the construct of the US equity market is not necessarily great to own with the view that rates will continue to rise.
When I look at Europe, and my next guest in an hour's time is going to talk about the demise of the euro, or the pressure on the euro, explicitly correlated to gas prices. Look, we're in the eye of a cost of living crisis around the world, but gas prices, electricity prices in France are the equivalent of $1,000 a barrel of oil. Can we dig a little bit deeper into your European call? Is it a relative value trade? Is it an outright call? Is it a defensive? How do you position in Europe?
So the view in Europe, it's a slight overweight. It's not a defensive positioning. It is very much about the improvement in valuation. I think the key thing to note is we're still broadly underweight equities and fixed income.
Right.
But within that equity call, there is a preference for European over US equities, and it's very much based on valuations being much more attractive. And really that a lot of the bad news is priced in with regards to the spike in energy prices. But some of the economic data actually in Europe isn't too bad. I mean, the second quarter GDP looks to be potentially positive in recent expectations, and there's been a great spike in tourism.
Do you think that holds up, or do you think that's the calm before the storm? You're going to have possibly switching off of Russian gas. You're going to have possibly an extension of the war in Ukraine, and oil is rising again. We've had it very, very clear. We are in an energy crisis. Can that endure?
Yeah, I mean, the energy crisis, I feel like the market has somewhat come to terms with it. It was a very big shock at the beginning of the year, and I feel like it's now a staple of the macro backdrop, and now we are able to really concentrate on the fundamentals of the equity earnings that are underlying. There's no doubt that growth is very much at risk, and there is a high recessionary risk there.
Within Asia-Pacific, various people have come on and said, actually, quite frankly, I can live without China in my portfolio. It's not going to make or break my year. When you say Asia-Pacific, is that Asia-Pacific excluding Japan, or will you have a little bit of excluding China, or does it include China? You see another stimulus draft this morning that we've just been talking about. Give me some more detail on the Asia-Pacific exposure again.
It does include China, and really the view there with Asia-Pacific is there's been quite an improvement in sentiment. When we look at earnings revisions, they've actually been trending upwards, which is in sharp contrast to other regions such as Europe and the US. And valuation there was always attractive, but typically when we look at our longer-term models, and this is much more medium, the regional equity views that we take are much more medium-term in nature, and that was certainly showing an improvement in earnings and sales in that part of the world.
Okay, Mervish, thank you so much. Deftly explained in terms of the underweight and the nuances therein. Mervish Ayub, Senior Investment Strategist at State Street Global Advisors. Well, if you do want to make your investments around the world, maybe you want to have a private plane take you there. Maybe it's just to play football matches. That's much more sexy story. Private plane shortages. Get this, it's hitting football. Never mind your billionaires partying at La Voile Rouge on the south of France, but it is Chelsea, Leeds and Newcastle. Their travel plans are disrupted, and if your travel plans are disrupted, your precious princes of football might not be in their peak condition. Demand for large chartered jets is rising across the UK, but here's the irony. Chelsea, now they lost 3-0 to Leeds. I don't know who to sympathise with, Leeds. Anyway. But the club manager, Thomas Tuchel, says preparations for the game were affected by the changes to his travel plan. So the irony is this, you don't want break-evens. Now, look, this is my producer alongside me this morning, Greg Tanner and I. We were looking at the data on this. I said, oh, look at this, Greg. Newcastle, Leeds, Southampton, belting away in terms of the percentage change in the number of private flights. But, of course, it is the beast of private airports in London where you're seeing this magnificent rally in the number of flights leaving London relative to 2019. But up north, they're spending large on private planes. I'll leave you with that thought. Quick snapshot of equity risk. It's not so much impacted by private plane flight, but you are looking a little bit of nervousness ahead of this Jackson Hole.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Daybreak Middle East. Our top stories this morning. Inflation is front and center as the central bankers descend for the World Gathering at Jackson Hole. The spotlight on the chair, Jay Powell. How hawkish will his message be? Emmanuel Macron warns of sacrifices ahead of this era of abundance coming to an end. Meanwhile, Invesco says autumn will be a rude awakening with commodity prices soaring ever higher. Hong Kong scraps the morning session of its $5.1 trillion stock market due to a tropical storm, delaying the debut of the city's biggest IPO this year. And as Iran nuclear deal appears to be edging closer, Israel's prime minister says his country opposes the plan and will act to prevent the Islamic Republic from acquiring nuclear weapons. Juliet Sally is with me in Singapore. She's got all the market reaction to this stimulus from China. Jules, good morning.
Yes, indeed, Manus. $146 billion pledged to support the overall Chinese economy. And no surprise, you are seeing quite significant gains coming through across equities, the Aussie dollar as well, rising about 0.5% against the greenback. This setting up the Asian benchmark index for its first gain in around 6 sessions in a week where we have been very much dominated by caution and these concerns about China's economy, and particularly as traders hold fire ahead of Jackson Hole. We are awaiting the reopen of trade in Hong Kong in about half an hour's time, so hopefully it will join in this buying party too. Morning session scrapped due to a typhoon which has now been lowered. And when you look at the currency market, quite significant moves. I mentioned the Aussie now up 0.6% against the dollar, but the Korean won also rising. Now, we were talking earlier in the week about the jawboning coming through from officials to really try and stem the currency slide here, which is at a 13-year low. But we also had the Bank of Korea today increasing rates to 2.5% as expected, but they raised their inflation forecast to 5.2% from 4.5%. And that is the highest projection since 1998. Also watching moves in the yuan, which is rising by about 1/3% against the greenback, the strongest fix, Manus, we have seen since February 2020. So really just showing that authorities are probably not that comfortable with the recent slide we've been seeing in the currency.
Yeah, and certainly we were talking to Engel about that a little bit earlier. It's still nowhere near as the big monster moves on the euro or the yen. Jules, talk to me about the earnings season. I mean, we haven't touched on the individual names for quite a while, but a little bit more on the downgrade side. What are the details?
Yeah, absolutely. SocGen saying, look, this is going to potentially lead to a raft of downgrades when it comes to earnings per share projection due to the fact that you have been seeing guidance and consensus revisions for Asian earnings as a whole. They say earnings per share growth expectations for full year 2022 and 2023 have been lowered to 8.6% and 9.1% respectively. Most of the region's emerging markets, according to SocGen, meeting estimates. But this also comes on the back of what you heard from Morgan Stanley saying that we have been really seeing quite a bit of weakness in terms of some of the markets, that the earnings companies that have been reporting, I should say, and they're seeing only about a 0.7% gain across Asian equity markets. Now, flipping the board and having a look at the broader economy picture as well, all of these earnings revisions flowing through into what you're seeing in terms of some of the downward revisions for China too. So as we look to this $146 billion worth of measures for the economy, is that going to be enough to get China back to those growth projections when you continue to see projections by economists slashed for 2022? Manus.
Jules, thank you very much. Juliet Sally, keeping it real from Singapore. Well, the United States has responded to the latest proposal to revive the 2015 Iran nuclear deal. It comes amid a series of negotiations that appeared all but dead just a few weeks ago. A spokesman for the White House National Security Council says the parties are closer than ever, but gaps remain. Simone Foxman is tracking this story from Doha. Simone, good to have you with me this morning. So more than a year of discussions. Every couple of weeks you and I come to this finish line, and I just wonder, is this a real finish line, and are we close to jumping across it and delivering a deal?
Not yet, Manus. And frankly, although this was supposed to be the exchange of the final text by the EU going back and forth, it's clear that negotiations are actually continuing and that neither side has really gotten to the finish line yet. From what we understand, there are sort of two key issues at play. One is an IAEA investigation into enriched uranium particles that were found at nuclear sites that Iran had not declared, or rather sites that Iran had not declared as nuclear sites. Iran has not been cooperating with that investigation. And number two, Iran wants at least economic guarantees that it's going to see a benefit from a return to the deal, even if the U.S. can't promise that the next administration is not going to also, again, follow the Trump administration example and leave the deal. Frankly, perhaps unironically, the best sign that we are getting close to a decision point is the vehemence of the Israeli response here. Yair Lapid, the prime minister, criticizing this deal very publicly. We're going to see Defense Minister Benny Gantz go to the United States, try and talk to U.S. officials about the deal. But the ultimate sign is going to be if we see foreign ministers go to Vienna, that would really be the signal that a deal is close. But remember, from a market's perspective as well, even if we do get a deal signed, it's likely to be months, if not next year, before we really see Iranian crude come back to the market.
Now, when it comes to lengthy negotiations, I wouldn't mind another trip back to Vienna, to be fair, next week. It's lovely, a lot of tourists there. Let's talk about another protracted set of negotiations, Simone. Saudi Arabia appears to be close to ending a years-long dispute over a planned metro system. So what are the details?
Yeah, a $22 billion planned metro system. Saudi Arabia stopped paying contractors, however, a couple years ago, back after revenues from oil dried up in 2015. And even though we understand the metro system is quite close to being completed, this has really stopped us from getting to that final mile. But now it looks like 2 out of 3 consortia that have been negotiating with the Saudi government over these disputed payments seem to have reached some sort of agreement on a settlement. These include the likes of Bechtel and Alstom. Clearly, the Saudi government in a very different position than it was back in 2015, seeing oil exports of more than $30 billion a day back in June, so plenty of money to spare. But this metro project, really key to Crown Prince Mohammed bin Salman's plans to make Riyadh the business hub, double its population. And if we do see a resolution here, this may restore some of the confidence that private sector companies abroad have in the government's ability to pay contracts that it enters into.
And finally, Qatar, your backyard, the Sovereign Wealth Fund there, $3 billion for Pakistan. What are the details of this investment?
Yeah, we understand that the Sovereign Wealth Fund looking into investments in airports, renewable energy, power, and hospitality sectors. This announcement from the Emir's office sent shares of Pakistan Airlines up 8.3% in yesterday's trading, so a big impact there. And it may overlap, we understand, with some $2 billion in aid that's already been promised from Qatar to Pakistan, so we'll see how the ultimate details come together. But what's clear here is that Qatar is seeking to support Pakistan from the very highest level. Again, this announcement coming from the Emir's office during a visit of the Pakistani Prime Minister. And this bodes very well for an IMF meeting that we're going to see next week about whether or not it should release $1.2 billion in aid to Pakistan. That would help Pakistan. That would improve probably where bonds are trading as well, because Pakistan has been hit by these same food and fuel inflation pressures that we have seen around the world.
Simone, thank you very much. Simone Foxman at the Qatar Financial Centre in Doha. To the regional markets now that we've enjoyed this stellar run lately. Our next guest believes there's still plenty of outperformance still to come over the next 24 to 36 months. Timing it will be key. Talal Samhouri, Senior Portfolio Manager at Aventicum Capital Management, joins me now. It's all about the timing, Talal. So here we are, oil's, on the rise, sentiment shaky ahead of Jackson Hole. Are you still, as long can be? A lot of people are saying to me, time to trim a little bit of profit during this summer of love of a rally.
Oh, that's nice summer of love.
Well, I mean, we've seen the correction back in between April and July, and I believe that correction was overdue. So now we're beginning to see another rise, maybe a slight profit taking in September because prices are rising really fast nowadays. But on a valuation basis, we still believe that the regional markets still have 7 to 10% rise for this year on the back of fundamental profit increases all over the regional markets. So we're still bullish. We like the regional markets.
And if we dig a little bit deeper into that, I mean, we've been speaking to the Bloomberg industry team on banks. I know that you like Saudi banks. They are putting forward a number of different issues. One is about the amount of building projects that will come online. Nearly $6 billion worth of building and construction are still to come in the Saudi economy. We've seen strong growth numbers in the Saudi economy, the fastest pace since 2011. So the growth and spending narrative, does that bolster the Saudi bank story as well as NIMS?
Indeed. Actually, we believe that the corporate-oriented ones will be the biggest beneficiary in the next 2 to 3 quarters because of the continued increase in projects, as you mentioned, where banks are financing large consortiums and construction companies and investments into the industrial sector. But we're a little bit cautious on the consumer-oriented banks because we believe the consumer is a little bit overextended because of the rising inflation, despite that it's much lower than Europe or the U.S., but still it is eating up part of their income, and that's why we're seeing consumer-oriented companies showing moderate results last quarter. And I believe this will continue for the coming quarter or two. And then maybe we'll move back to consumer names, depending on if prices adjust to the new norm or not.
Now, I'm just looking at the Dubai market. Obviously, it's still had a tough run overall in the year, but we're up 21% from the lows in July. You are underweight the UAE and Oman. Why?
Well, basically, not the whole UAE. We're still very selective in UAE, although we're underweight as a market. But because the run-up in prices on the Abu Dhabi side, it becomes a little bit scary to be in that market as a whole, given that, usually Abu Dhabi is the leader and Dubai, follows through. And if Abu Dhabi falls as we expect, I think Dubai will follow slowly. The prices are at fair valuation, whether real estate or other names. Some of the banks in UAE we like because they're still, in our opinion, undervalued. But in general, we would be underweight UAE given the oversize in the Abu Dhabi side of the market.
What's your view on inflation here in our region? We saw some prints come out the other day, around 7% here in Dubai, and people are sort of saying our inflation is yet to come to life. The governments here have done a better job, perhaps, at containing inflation because of some of the subsidies and caps that they've put into place. Do you think that we are going to go into an inflationary spiral here in the region? What is your deepest concern in that regard?
Well, we're seeing a lot of companies cushioning the increase in prices, especially the consumer-oriented names in the market, the consumer staples. But we're beginning to see some of the leakage of that increase in raw material prices going to the consumer, which will hurt consumption and demand in general. So I think the governments and companies will continue to rein in rising prices, the global rise in prices, they will pass through some of the increases, but eventually they will wait on until inflation subsides globally, where then they can raise prices to match their global peers. But in general, we believe the governments in the region are majorly containing the rise in prices, mainly, of course, from the transportation sector, the oil price and the gas prices at the pump.
Talal, thank you very much. Talal Samhori, the Senior Portfolio Manager at Aventicum Capital, with his views on the market. Tread carefully across Abu Dhabi and Dubai. Be selective. Right here on Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Ken Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
This week, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
Central banks hiking too aggressively to tame supply-driven inflation risk only could make things worse. That's according to the Nobel laureate economist Joseph Stiglitz. He spoke to Bloomberg in Germany.
Raising interest rates doesn't solve the supply side problem. It can even make it worse, because what we want to do right now is invest more in the supply side bottlenecks. But raising interest rates makes it more difficult to make those investments. And if you look at the economy today in the United States and other places, it's very clear that there are strong elements of market power being exhibited. And in standard models of market power, raising interest rates can lead to even more raising of prices, more inflation. And if we look at one of the sources of inflation, housing, at least in the United States, there's evidence that when you raise interest rates, landlords pass those higher costs onto rents, again increasing inflation. But the basic thing is, I ask the question, how will raising interest rates lead to more food, more energy, and so solve the the chip supply problem? Not at all. So they won't go at the basic source of the problem, and the real risk is that they will make things worse.
Joseph Stiglitz there, Nobel laureate there, lambasting the policy of raising rates to contain inflation in 2022. Let's get back to the Middle East markets now with our equities reporter Farah El-Barahi. She joins me now on the Kuwaiti stock story. Rallied on Tuesday, moderated yesterday. Bit of volatility, but is there a specific name or a set of names behind the volatility?
Yeah, absolutely, Manis. These were the banks. The rally over the past 6 days was in part fueled by a report in Al Ra'i newspaper, that's a daily in Kuwait, saying on Saturday that lenders are seeking 400 million dinars in arrears from the government for deferred payments on consumer loans during the COVID period. So if banks are recovering some of that, some of the losses that they've seen over the pandemic, or and a big part that has weighed on their share price, that has weighed on their earnings, that's a really big upside to the banking sector in Kuwait. And as well as the oil price recovering, we're now today and this morning we're above $101 a barrel. That's also boosted sentiment a little bit. A bit of profit taking yesterday, but the banks, they're leading the rally in Kuwait.
And to Israel, of course, a 200 basis point hike and a hawkish message from the central bank this week. They're not done yet. Now, how does that play out to the equity story?
Well, we've seen some weakness at the start of the week. Certainly, the equity market did dip quite a bit, led by the banks the day the central bank hiked. But yesterday, after we heard or the day before rather, after we heard that the central bank will be even more aggressive, there will be more rate hikes, the equity market actually rallied. So it seems that a lot is already priced into the equity market in Israel. If I just looked at the names of the companies leading gains on the TA35, that was across the board. Gains in the likes of ICL, Elbit Systems, which is the defense name, as well as the banks such as Bank Leumi and Israel Discount Bank.
And Saudi stocks, how have they performed? I mean, we've got price volatility, we've got oil making it down to $90. Then His Royal Highness Prince Abdulaziz bin Salman comes out, creates the OPEC floor. We now know what it is, Your Royal Highness, $90, it's grand. We got the message, we got the memo. But translate that to stock vol for me.
Well, it has been quite a ride for Saudi equities this week, I will say that. But it is the first weekly drop for Saudi equities after a 5-week rally. So we did see some weakness. It seems that all of this volatility has finally caught up to the Saudi market. A lot of it has been partly due to earnings, but still sentiment is just impacted by that volatility that we've seen in Brent going from $90 to $100. So we'll see. This week is probably going to end up a little bit lower for the Tadawul, but overall it's still up over 11% for the year. So that's not pretty bad given the global equity performance.
Well, it's certainly outperforming a few others in the region, isn't it, Farah? Thank you so much, Farah El-Barahi there, my reporter in house here on the equity market. Plenty more ahead on Daybreak Middle East. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
Top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Hong Kong-based insurance company AIA reported a 15% decline in new business value for the first half of the year, and that as COVID lockdowns dented the sales on mainland China. And the group CFO, Garth Jones, caught up with Bloomberg a little bit earlier.
We've seen a resilient performance for the business. We delivered a growth in June, which I think is notable, and that reflects growing momentum that we've seen in the business from the first quarter into the second quarter. What we have seen is our diversity coming into play in the first half. We have a very diversified business across 18 markets. And as I say, for the group overall, we've seen the momentum build, and now moving into growth into June, I think, is important.
Given the uncertainty right now about COVID-0 policies across China, what are your expansion plans in the mainland? I mean, are you still targeting that 1 to 2 regions per year at this point?
Yeah, in China, we had a very good performance. We significantly outperformed the market in the first half. We have a very differentiated agency force in China that's focused on protection and long-term savings. It's highly professional. And we, in fact, saw productivity in the agency force increase in the first half. We've seen the business come back after the movement restrictions were eased. And in fact, we moved into growth in July, which I think is really well ahead of where the market has been. In terms of the new geographies, we're very pleased to open our new branch in Hubei, and we have approval now to start preparations for our next branch in Henan, which is another 100 million people. It's a huge market. Those new markets have been performing really very well for us. We've been extremely encouraged by that.
If you're looking for volatility, I give you parabolic moves at the short end of the UK yield curve. If you thought it was a bit tight in the US, have a look at this 2-year paper over the past 4 days. You are looking at the short end, I would say, becoming unhinged. We moved by 23 basis points yesterday alone. The curve flattened we're now at the flattest since 2008, and this goes down to the issue about debt in the UK. They spent £400 billion on COVID. What will they have to spend on energy subsidies? Let me just show you what's going on with the pound, because, of course, there's a huge concern. The debt pile in the UK, 25% of it is linked to inflation-issued bonds. This is the spike in 2-year yields, and yet still the pound just takes it on the nose, a bloody nose at that. I want to leave you with a live shot of Hong Kong. We'll be back in just a few moments, but of course Hong Kong had delayed the opening of its market, and an IPO of that market there is huge. It's a $5 trillion stock market, delayed an IPO. Now, it would appear that the Hong Kong Observatory is lowering the storm warning to signal number 3. The market will reopen in just a few minutes.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré, Through these images, we can live the violent emotions of hell, the weight of purgatory and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside, so it's about using technology, pixels, and binary code with a human and humanizing content.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Good morning from our Middle East headquarters in Dubai. I'm Menace Cranny. It's Daybreak Europe with the stories that set your agenda. Parabolic shift. Global gas prices jump to near record levels, while France's Macron travels to Algeria to scramble security of energy supplies. Taking out the toolbox, Beijing announces an additional 1 trillion yuan stimulus in an attempt to rescue its economic growth. Eye on inflation. Investors turn their attention to Jackson Hole, where Jay Powell is set to take center stage. We'll be on the ground in Wyoming. Very warm welcome to the show. It's just gone 6 a.m. in London. It's 9 a.m. in the DIFC. It's 50 degrees out there, and it's getting hotter in the equity market and the bond market. Volatility is rising. Equities are grasping perhaps their last draw of breath in case Jay Powell goes all hawkish on them. But the equity markets are rising, more so on the China stimulus narrative, which is coming through. So the equity markets are rising. You got stocks eking out the smallest of gains, maybe up 0.2%. Let me just double check as far as equity futures are concerned in the United States of America. There you go. We're pushing a little bit higher, up 0.5% now. And a lot of this is perhaps the bar is high to a hawkish surprise from Jay Powell, as the market is still convinced that they will get to grips with inflation. Roll it over, have a look at the cross assets. This could be a surprise for everybody, because I forgot to send the elements for this particular board. Let's have a look. What have we got? Roll of the dice. We'll come back to the cross assets in just a moment. Let's get to the reporters. Let's get to the reporters around the world. Dan Murta joins me for the latest on global gas prices, as well as the recent OPEC-induced oil moves, while we get the Asian market reaction on the back of that massive stimulus announcement from Beijing. And a turbulent morning in Hong Kong at the exchange. Garfield Reynolds joins me with a preview on Jackson Hole, the meeting. So let's turn our attention to the energy market. Natural gas prices are soaring in Europe. Asian markets, as the worst of the energy crisis in decades intensifies. And Saudi Arabia has warned that OPEC might have to curtail production to stabilize the oil markets. That was last week. And of course, a clack of other OPEC countries have joined in behind Saudi Arabia. Joining me now is our energy reporter, Dan Murta. So His Royal Highness speaks and the clack join in. Good morning, Dan. Run me through the details. Let's talk about gas, first of all, because I think that's where the parabolic moves were in the first instance. Gas up 13% yesterday. What drove it?
A couple of different things. There are supply disruptions happening all over the world. Everybody knows about the tension between Russia and Europe right now. But on top of that, Norway is sending less gas into Europe because of a series of planned and unplanned outages. That's going to continue on through September, limiting the amount of gas they're getting. At the same time, a U.S. export plant in Texas had to delay restarts from October. They're pushing it back to November. That's going to mean fewer cargoes available for this winter. And on top of that, in Asia, Russia has decided to cancel at least one shipment to an Asian customer because of payment issues as Gazprom tries to nationalize a major export plant. And so traders are very, very, very concerned that, this is just going to increase competition. You're going to have Japanese and Korean buyers going in there, maybe even Chinese buyers coming in here and trying to compete for the same cargoes that Europe is trying to draw its way. And that's just pushing prices for everything up. TTF, LNG prices, even U.S. natural gas prices, which are among the lowest in the world, hit $10 earlier this week for the first time since 2008.
Yeah, and this is where it begins to get really, really tight, because that Biden administration is banking on the drop on gas prices at the pump. But there you go. The electricity costs in Germany, the equivalent of over 1,000 euros per kilowatt hour over the past 2 years. Let's dig a little bit deeper into the OPEC story. The line last week from Saudi Arabia was about the concern of a disconnect in the futures to the physical market, and mentioning the word cut. Now we have, I referred to them as the clack, but of course they are the rest of some of the OPEC members coming in behind Saudi Arabia and uttering their support. What do we know?
We're still waiting to see how this turns out. But, as you know, all year long, people have been hammering at OPEC to increase production, raise production. And then since early June, prices have dropped from more than $120 down to nearly $90 last week. They've steadied a little bit this week. They're up at about 100. But OPEC is concerned about that. And they're concerned that the futures markets, which are trading with really, really low liquidity right now, aren't really capturing the tightness they're seeing in physical markets. They're not capturing how much demand there really is. And so they're saying we might need to cut a little bit just to remind the futures market that, hey, you got to keep prices up to stimulate more producers to drill, to make enough oil to keep the world, a well-oiled machine, pardon the pun, for this winter.
Well, this goes back to the key point that Secretary General made last week, and His Royal Highness, along with the other OPEC ministers, have made. Serial underinvestment around the world is part of the problem, and it needs to be part of the solution. Dan, thank you so much. Dan Murta there with the very latest on the moves in the gas market and oil. To China, in our headlines, the pledge was that there'd be more stimulus to stabilise the slowing economy. The State Council is now earmarking an additional $43 billion in policy and financial tools. The stimulus pledge by China is lifting Asian markets this morning. They're getting a bit of a boost. Juliet Sully is in Singapore with us. So, Jules, the question is this. We've got a decline in the yuan, a stimulus in terms of yuan into the economy, and a 19-point plan. It's a confluence for the bulls.
It is, Manus, and it's just another effort to really try and shore up this economy at the point when we are already seeing authorities very worried about growth. You've got the COVID headwinds, you've got the Shanghai lockdowns, and of course now you've got the power crunch too, just really weighing into this economy. So how much more is this stimulus going to really turn the dial? Well, certainly at least today we are seeing the bulls take charge and Asian stocks rising for the first time in 6 sessions, just as slight gain there on the CSI 300, but importantly above that 4,000 psychological point level. Now we are watching the reopen of Hong Kong. Trade there was scrapped in the morning session due to a T8 warning. That typhoon signal was then lowered, and you do have Hong Kong stocks jumping in the afternoon session, the most in around 2 weeks. But certainly this stimulus as well boosting the likelihood that that could be positive for commodities. So you've got the Aussie up by about 7/10 there against the dollar. And we also had a Bank of Korea interest rate decision today. They lifted the key rate to 2.5% as expected. They've also adjusted their inflation forecast to the highest projection since 1998. You've got the Korean won gaining today. Of course, we know there's been a lot of government jawboning there too. And when it comes to the currency markets, as you rightly mentioned, the yuan here, how much of a balancing act is this when you've got the on and offshore yuan trading near these 2-year lows? Let's have a look at my chart here, guys, when we're looking at the yuan, because of course we did actually have today China setting the strongest yuan fix versus consensus in more than 2 years. And this is really just suggesting that perhaps Beijing is not that comfortable with the depreciating currency. And Maybank saying they also probably want to see a little bit of stabilisation ahead of Jackson Hole. Manus.
Jules, thank you very much. Yeah, a little bit of stability going into that. I don't think anybody would be averse to that. Juliet Sully in Singapore. The central banks that hike too aggressively to tame inflation risk inflating prices further. That is the view of the Nobel laureate economist Joseph Stiglitz.
Raising interest rates doesn't solve the supply side problem. It can even make it worse, because what we want to do right now is invest more in the supply side bottlenecks. But raising interest rates makes it more difficult to make those investments.
Salutary warning there from Joseph Stiglitz. That's as the central bankers from around the world gather for the Fed's annual Jackson Hole Symposium. The spotlight is on the chair, Jay Powell. Just how hawkish a message will he put forward? Let's bring in our Markets Live editor, Garfield Reynolds. Garfield, it's going to be a tough job for Jay Powell sort of to thread this needle tomorrow. As you go towards Jackson Hole, where do you think he's going to lean? Is he going to lean steady as we go, we're not done yet? Or will he give the equity market bulls more stake?
Well, the Fed recently has been pretty keen not to give the equity bulls much feed at all, especially because markets have actually effectively sent financial conditions almost back to neutral at one stage, at a time when the Fed wants to be tightening them because they're still extremely concerned about inflation. There's a lot of anticipation that Powell will go uber hawkish. I think it's going to be very hard for him not to go hawkish, and even then he might disappoint some of those expectations. I also think that leaves us open to a very volatile session both tomorrow and then into next week. You know, we could have another one of these situations where the market has one set of takeaways from what Powell and others say, and then we will get Fed speakers coming out early next week that could, you know, try and pick apart some of those market interpretations. I also think it's extremely interesting that if you look at the MOVE index, which is the fear gauge for the treasuries market, that's at 133 or so. That's the most elevated it's been at this time of year for most of the last 30 years. The only times when it's been more elevated were in 1990, 2002, 3, and maybe in 2009 or so. Those were all times when the Fed was cutting rates because the economy was in a recession. Now we've got the Fed hiking rates to try and tame inflation and admittedly setting off warnings of a recession. So it's a very, very anxious time in the bond market, and that's also leading to plenty of angst across other markets, because if bond yields go significantly higher or significantly lower, that instantly changes the calculations for a whole range of investors.
I think what's interesting is I was opening up the Standard Chartered note this morning from Steve Englander, and he made a very important point. We put it into the GTV library, Garfield. You might not have a monitor, but basically he looks at, the whole narrative, the short end, inflation expectations in 1 year, they're rolling over, that bolsters the bullish case. Englander takes it a step further, and I like it. He talks about the medium-term inflation swaps. They are rising, and they're rising above the 1 year. In other words, this is sticky inflation, and they're going to have to really stay the path to bring these inflation expectations down. I thought it was an interesting chart, and it really goes to the heart of the credibility, as Valerie titled, our Queen of Charts and I were discussing this morning. Those kind of moves, that stickiness of inflation further out, do you think we've missed that a little bit in these markets?
Yeah, I mean, the market's been very tightly focused on what's the Fed going to do now, what's the impact going to be. There is, an undercurrent of concern that inflation is going to be sticky. You even had the Bank of Korea forecasting that. You've had other central bankers warning about that. You also have the dynamic going on of a worry about a rerun of the 1980s, when you had strong inflation, the central bank hiked a lot to get that under control. What do you know? That looked like it was sending the economy into recession. So they turned around and started cutting rates and discovered that sent inflation back up. So it's obvious that markets are very worried that the trade-off between high rates and low growth versus, can you get inflation down via that route is not set in stone.
Well, I'll leave you with this thought, Garfield, because my next guest, we're going to talk to him. 1994 was the only other real soft landing. 300 basis points of a hike, 6%. I know I lost my shirt on writing put options in bond markets in that year. So 300 basis points of a hike, 6%, and then they backtracked. That delivered a soft landing. I'm going to leave you with that thought, 6%. I'll say it again. 6%. So, Garfield, let's see what tomorrow brings. Stay up late, get the nachos in. Garfield Reynolds, Markets Live editor, joining me on his view ahead of Jackson Hole. And, of course, we'll have special coverage of the symposium at Jackson Hole right here on Bloomberg TV. The team are there at the moment. They are arriving ahead of the Fed officials. Let's take a look at some of the things the markets are going to be focused on for the rest of the day. 12:30 p.m. UK time, the ECB will publish the account of the July policy meeting. 1:30 p.m. we're going to get US data, including GDP and initial jobless claims, and it's the jobs market that's going to be very much in focus for the Fed, as well as CPI. 2:30 Tesla begin trading in the stock split. It's a 3-for-1 stock split, so let's see if there's any reaction to that. Later in the day, Kansas City Fed hosts its annual economic policy symposium at Jackson Hole, Wyoming. Coming up on the show, T.S. Lombard, Senior Global Market Strategist, Skylar Montgomery-Conning, joins me shortly on the markets, plus a big day for German data, both second quarter GDP, along with the IFO Business Climate Report, with a preview on Bloomberg.
SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
How much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan's society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
But if we got negative payroll data in the next couple of months, and that's possible because the household data is already negative, that would be maybe something where they would pause. I don't think they start slashing rates, but they could pause. The problem with that narrative for equity investors, John, is that's not going to be good for earnings and it's not going to be good for stock prices. And my biggest concern in the last 3 weeks is that, we've gone from 15.5 times earnings on a forward basis, which has always been our target multiple, but that was before earnings got cut. And now we're back to 18 times. So the price is just wrong.
Well, Michael, you look at the Fed and you see the big distinction next year. Next year, 2023, the divide between a market that hears rate cuts and a Federal Reserve that's not talking about anything but hikes.
I feel if I'm wrong, it's because the Fed's going to have to go much higher than 4%. What doesn't get talked about a lot is there's still a lot of labor shortages everywhere. My fear is not that the Fed gets to the 3 3/4% that the market has priced in and then pauses. Forget about rate cuts. I think that's a fantasy. But actually, unemployment is still low, that there is a wage price spiral that's become embedded, and they've got to lean further into it, regardless of where GDP is.
Morgan Stanley's Mike Wilson, JP Morgan's Bob McKayley there speaking to Bloomberg's Jonathan Ferro. That was yesterday. 24 hours is a long time in markets, especially ahead of Jackson Hole. Let's get to TS Lombard, Senior Global Macro Strategist, Skylar Montgomery Cunning. Skylar, good to have you with me. It's a fantasy that we will have rate cuts next year. We're going to get way beyond 3 3/4, which is where the WERP is at the moment, 4%. And that has pretty big implications for your scenario analysis. A soft landing, highly unlikely?
Yeah, so I mean, it's interesting because if you look at previous cycles, you know, everyone kind of divides things into a soft landing and a hard landing. And, you know, that fabled kind of soft landing is an economic outcome where the Fed hikes enough to bring down inflation, but they don't significantly damage the economy. And, you know, a true soft landing has only happened once. It happened in 1994. And I think people don't give the Fed credit for this cycle because they hiked 300 basis points to 6%. They saw the economy was cooling, and then they cut by 50 basis points, and the economy stayed strong because they hiked back to their estimation of neutral, and it was this fabled soft landing. You know, lots of people think of the hard landings. They think of the 70s where the Fed over-tightens. But, you know, those cycles, they over-tighten on purpose, right, to bring down inflation. And you kind of do have these middling grounds where you get what would be described as a soft-ish landing. And obviously we've heard that terminology from Fed Chair Powell, and we've heard it elsewhere. But essentially the idea is, you know, it doesn't need to be this sharp contrast between a very, very soft landing and a very, very hard landing. You could have a recession. It could be a soft recession in terms of the magnitude of the recession. So not as much GDP declines, not as much unemployment rising, but also in terms of duration. So we forecast a recession at the end of this year, but we call it a soft recession. So it's only 2 quarters of negative GDP growth. And it's also, you know, not that huge rise in unemployment that you traditionally associate with recessions. You know, a lot of recency bias points to 2008, for example, as a recession people point to.
So in a softish landing, in a softish landing, which is an interesting call. What does that do to your equity positioning? You've had this rally predicated on a rollover in inflation, which I'll come back to in a moment. But first of all, give me your equity call and then talk me through the credit aspect, because Bob McKayley was saying basically credit is too tight here. It's going to be a hard and brutal repricing in credit, up to 800 maybe. Equities first, then credit.
Yeah, of course. So we've divided kind of the previous Fed hiking cycles after the final Fed hike into our soft or softish landings and our hard landings. And, you know, after the final Fed hike, if you're in a soft or softish landing, then equities outperform the hard landing and you kind of get this grind up. I will preface that by saying, though, you know, we haven't had the final hike. We have quite a lot to get there. We still see rates rising to 4%, and we think equity markets are already pricing a soft landing. So while the outlook is more positive, there are definitely risks there for sure. But it is, you know, it's much better than a hard landing. In terms of credit, when we look at credit markets versus equity especially, I think credit markets, you know, they're pricing more of a recession risk than equity markets are. And so in terms of our asset allocation, we're -1. So we're negative on equities generally, but we're more neutral on credit because they price more of that risk, but also the natural hedge characteristics of credit, right? So when you go into a recession, you go into that hard landing, because we've kind of got a return of that normal bond equity correlation that also feeds into credit markets. And it means that while you will get spread widening, it's not as bad as in equities. So, you know, you probably prefer credit over equities into a recession and into a downturn generally. And that's true now as well.
So you see these credit spreads as having done their worst. You think credit's fairly priced?
I think in terms of your relative value, it's better than equities. I think, you know, you probably prefer IG over high yields. I don't think the defaults are fully priced in terms of if we get a very, very sharp recession, that's still a risk, right? So I wouldn't be outright long credit, but I like credit versus equity. You know, you want to be somewhere higher on the risk scale than previously because the inflation outlook's getting better in terms of supply chains, disruptions coming off in terms of that kind of supply-driven inflation outlook getting better. So we're moving kind of shifting more to a positive stance because of that, but I wouldn't be outright overweight risk. In general, you know, we're below neutral and on risk in our asset allocation, and that means our beta is below 1.
Now, Invesco have an interesting narrative. It's co-joined to their inflation outlook, where they talk about a rude awakening is coming in the energy markets. Now, a great deal of the risk-on narrative has been built on the edifice of a decline in oil prices, a rollover in some of the commodity prices. That is set to end, according to Invesco. We're in for a rude awakening. And if you look at the oil markets, the Saudis have created a floor. $90 is the floor. It's very evident. 6-month low on oil. We've turned it around. We're trading above $100. The softish landing that you've just outlined, how much of that is predicated on a non-resurgence of a vicious commodity upswing and a tightening in the oil market?
Yes. I mean, you've got it completely right in terms of so much of the outlook and so much of what's happened in the past year is based off of energy prices and oil prices generally. So what you get is when it's supply-driven inflation, that's something that central banks can't fight. They have to overcompensate on the tightening side, right? So they can affect demand-driven inflation, but they look at overall inflation. You know, we've had this big shift in monetary policy in terms of the Fed and other central banks were looking at those micro stories last year, and that led them to not tighten quickly enough. And so now they're just looking at the headline number, and they're saying it's too high. We don't want to differentiate between supply and demand-driven inflation. And so if, you know, you get that resurgence in oil prices, that means that they have to tighten more and further to get the overall inflation number down, and that makes the growth outlook much worse. And so, you know, obviously it affects different economies differently, but that is a big risk to kind of just softish landing if you get a large resurgence in energy prices.
Skylar, thank you very much. Skylar Montgomery Conning, TS Lombard, Senior Global Macro Strategist with the softish of a soft landing. Coming up on the show, European and Asian natural gas prices surge close to record highs as the worst energy crisis in decades intensifies. This story on Bloomberg.
บริการออกแบบและติดตั้งวิดีโอคอนเฟอเรนซ์โดยผู้เชี่ยวชาญ Smart Solution Computer.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Recently, cryptocurrencies have been very popular. And if a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. You know, I would characterize us as crypto learners. You know, we have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and so it's so uncertain. But it has the potential to completely upend everything.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
It's Daybreak Europe. I'm Manus Crenny in Dubai. Now, yesterday I asked you where you wanted to be in moments of great existential angst, and the answer to that was the dollar. But if you want to understand parabolicism, I'll take you to the UK gilt market. Two-day move. This is an explosion, the likes of which is very, very hard to imagine what happened here. Yesterday, there was almost a moment of realization, the scale of the debt in the United Kingdom. The two-day move in the UK gilt market up by 23 basis points and a deep flattening of the...
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now, the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning from Dubai. I'm Manus Cranny with Daybreak Europe and the stories that set your agenda. Parabolic shift. Global gas prices jumped to near record levels as France's Macron travels to Algeria in the scramble to secure more energy supplies. Taking out the toolbox, Beijing announces an additional 1 trillion yuan of stimulus in an attempt to rescue its economic growth. Eye on inflation. Investors turn their attention to Jackson Hole, where Jay Powell is set to take the stage. We'll be on the ground in Wyoming. Warm welcome to the show. Equities are clawing their way into the green this morning on the back of the China stimulus story. We're waiting for Jackson Hole, how narrative will shift from Jay Powell, that the Fed has yet to do their mission. And T.S. Lombard tell me it will be a softish kind of landing. Not hard, not soft, but a softish kind of landing. In terms of the markets, you've got crude oil up 0.4%. The other nations following in behind Saudi Arabia on the possibility of a cut. Algeria, Kuwait, Equatorial Guinea and Venezuela all issue statements supporting the Saudi narrative. We know now where the put option is for the Saudis, and OPEC, it's at $90. Euro-dollar, again, you're just seeing the euro a little bit of reprieve, up 0.25% ahead of the EFO survey. And euro-sterling, again, just the euro slightly lighter this morning. Some of these FX huge moves are perhaps just pausing for breath. And there's the equity narrative now, up slightly this morning. Let's get to the rest of the stories. The world is grappling with soaring inflation and the knock-on effects of the war in Ukraine and the risk of recession. We spoke to 3 Nobel laureates in economics about how fiscal policy can tackle the challenges.
We are in a period of extreme uncertainty.
We've learned there can always be a new unanticipated shock that pushes it up or down. Of course, the way the Ukrainian war goes could have a huge impact, and that's very difficult to predict.
So I'd say that we are in the worst, and that's why I think that we need more of a gradualism, so it's not to shock expectations too much.
I think there is a real risk that the central banks act too aggressively, raising interest rates too fast, too far.
It could also happen if fiscal policy worldwide is on on average, much too expansionary, we could have no recession because we failed to succeed in bringing inflation down.
Joining me now is Themos Theotakis, Head of FX Research for Barclays. Themos, thank you very much for joining us this morning. So there's the narrative from the Nobel laureates. I think Stiglitz is quite interesting, where he talks about, rate hikes are not the solution to the supply side problem that we have, but we're in a rate hiking cycle. 3.75 is where the market currently suggests we will top out. Is that fully explored in the dollar on a broad base against G10 at the moment? Let's start there.
I would say to a large degree, the central banking side, it has received disproportionate emphasis relative to what is actually driving the dollar. Actually, ourselves, in the beginning of the year, we were thinking that, the ECB would surprise more than the Fed, and indeed that has happened, and indeed real rates have actually increased in both places, but more in Europe, but the euro has actually slid quite a bit more than we would have originally thought, which is partly, a statement of the fact that central banks are important for rates, for equities at the moment, but there are other things that are driving the dollar in particular.
Well, I know your view is clear on what's driving the euro's demise, and that's the correlation coefficient to natural gas. But if you're saying to me that it's other risk elements that are driving the dollar, I want to circle off with the dollar exhaustion narrative. BMO said to me the other day, the dollar tops out in a month, not 3 months. But what, in your view, if it's not rates that's driving the dollar, what is the alpha of the next dollar's leg?
So I think that if you were to actually look at the dollar rally from February, let's just say, until now, you can actually pin down the entirety of the move to two things. One of the drivers, which you correctly identified, is this enormous issue of energy security in Europe. And that, in our models, accounts for about 6% of the euro-dollar drop over the last 6 or 7 months. The rest is not well acknowledged by markets, is driven in our models, in our estimates, in our views, by the substantial and very severe slowdown in China, which has substantial implications for growth across the world, but is less important for growth in the United States. And that asymmetric shock to the rest of the world relative to the United States, it's what has accounted for at least half of the dollar move since the beginning of the year.
And that's what we're showing here, the correlation between the gas prices and actually the gas security narrative that you've pointed out in terms of the demise for the euro. Now, you mentioned China there, and obviously the yuan is down by 7.6%. That's less relative to the move on the euro against the dollar, against the yen's move against the dollar. So the natural question to you is, as more stimulus comes to bear from the PBOC and more rate cuts, can that drive the yuan lower? I know you say that rates aren't driving the dollar, but can the rates narrative in China drive the yuan? Or what is it that drives the next level or the next leg in the yuan story, in the renminbi?
I think what you're saying is spot on. And the main difference here is that with a huge broad balance of payments surplus, underpinning the stability of the yuan, where the yuan goes from here is pure choice by the authorities in China. What the authorities in China are facing is a slowdown that is mostly driven by two very fundamental pillars of China's policy. The zero-COVID policy, which is suppressing household income and consumption, and the deleveraging policy, which is suppressing household assets, mainly invested in the property market. So they're looking for levers to stabilize or boost their economy, and the least explored lever so far has been monetary conditions, as you correctly identified, part of which is the currency. And interestingly, since the Beidai meetings in August, we have started to see a shift towards more easing, and probably in that direction. The yuan is very expensive relative to any other dollar cross. There's no reason why it should be so expensive, and I think that it probably extends. To give you a sense, even to bring the currency basket to stability relative to where it was in the beginning of 21, the yuan needs to drop to something like 7.25 against the dollar.
Oof. That's going to be a bit brutal. I wonder how the FX manipulator tag will be used then. Themis, let's talk about one currency. I mean, I looked at the short end of the UK yesterday. Valerie Teitel, our Queen of Charts, put this together for us. Parabolic move at the short end of the curve, and yet sterling barely blinked. There's all of these monikers. Oh, sterling's trading like an emerging market currency. It's a basket case, etc. How much lower does the pound go, given the gravity of the debt situation in the United Kingdom? Give me your view.
So, not enormously so. If you look actually realistically at the pound against an anchor currency like the euro, the pound has basically traded in line with the euro with very little volatility, which tells you that if you were to look at the markets in terms of what's driving them and not sort of like a sense of theory, basically the pound is stable against the euro. And what is driving the pound here against the dollar is the broad dollar trend, the broad regional issues that we just described right here. Now, that's not to say that there are not risks in the pound. You can have a new leadership that explores a more aggressive angle against Europe in terms of trade relationships and resurfaces the risk of a trade war. But generally, and in that sense, there's downside risk in the pound.
Do you think that's a real risk? Let's just close off there. Do you think that's a real risk, or do you think it's the debt trap that the UK is in? 25% of the UK's debt is in inflation-linked bonds. I'm going to say that again. 25% of the UK's debt is in inflation-linked bonds, and we are nowhere near done on the rate hiking cycle in the United Kingdom if you go by what the market says.
I think you're correct. I think that the rate market has been phenomenally anchored at the long end, and I think that when it comes to the pound, the two things to think about is A, trade relationships, and B, the fact that the UK is presumed to be, but is actually not immune to the natural gas shortage issues that Europe may face this winter. And these are the two risks that I think probably tilt the scale slightly negatively for the pound.
Okay, Themis, we've got to draw a line under it there. There's the two-day move in the short end of the curve. Themis Viatakis, head of FX research over at Barclays. Next time you come in, Danny will be alongside you there. Okay, that's state of play in the foreign exchange market. Juliet Sully is in Singapore. She is the First Word News. Jules.
Manus, European and Asian natural gas prices have surged close to record highs as the worst energy crisis in decades intensifies competition to secure supplies. Tensions have intensified as Moscow prepares to shut the key Nord Stream pipeline next week for 3 days of maintenance. European power plant outages are also further sapping supply, pushing wholesale energy prices to more than 10 times their seasonal average over the past 5 years. China is stepping up its economic stimulus with a further $146 billion of funding, mostly for infrastructure spending, as the economic recovery slows amid COVID lockdowns